7 people were killed. 2 of the men pleaded guilty. Islamic State has claimed responsibility for Friday's attack as Russian officials continue to suggest a Ukrainian role in the massacre, a claim Kyiv denies. That's your Bloomberg Brief. John?
Yahara, thank you. Up next on this program, Fed speak following a dovish Chair Powell.
The demons are at work. People are worried about a re-acceleration, or we eventually will roll into recession. They're waiting for a better buying opportunity.
That conversation up next. Bob Michael at JP Morgan Asset Management says he feels great. He feels really good. Sort of hasn't been this bullish since the mid-2000s. Not alone. From New York, this is Bloomberg.
Timelessness and sustainability go together, right? You can't expect to be timeless if we're run out of resources. So for me, sustainability is not a side activity. It's not a reaction to external pressure. It's core to who we are, what we stand for. And to a very strong extent, it's about future-proofing our business, right? You need to focus on sustainability to recruit. More and more, that younger consumer we're talking about, they want to work for companies that care about this planet, that do more than just kind of generate revenue and profit. You need sustainability to attract consumers. More and more, including that younger consumer, they care deeply about what are you doing differently? How are you making a difference? Investors, particularly in Europe, more and more place value on what you're doing in sustainability. Many of our partners have expectations on sustainability.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Or other authorities.
Could face bigger challenges next.
Was going to keep winning World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Starting the week a little bit lower on the S&P 500, negative by 1/3% on the S&P. Yields a little bit higher by 4 basis points, 423.75. Spent the weekend, not the whole weekend, just parts of the weekend. Do have a little bit of a life, but spent some of the weekend.
A little bit.
Just a little bit, tiny bit. Trying too hard now, right?
Carry on, just
Let me get it out. Spent some of the weekend thinking about
crushing it.
If Mohamed Al-Erian is right, is it good or bad for bonds? What does it ultimately mean for fixed income? If this Fed is willing to tolerate a range of inflation of somewhere between 2 and 3%, what does it mean for fixed income?
The answer is it depends. And as he said, even that he saw the 10-year within range actually making sense. Longer term, what it strikes me as is it's not a good proposition for bonds. Because longer term, there is this question of the Fed's ability to counter downturns with the same kind of rate cuts as they have in the past.
Can I just reiterate, spent some of the weekend just thinking about that. Went to watch the football in New Jersey. Very impressed.
What else did you do?
That's the only reason why I know you have a little bit of a life.
Red Bull Arena. Very impressed.
You can talk about anything else.
Sung the Italian national anthem, hand across my chest. Gigi Buffon was there. Chiellini, Fabio Cannavaro. Fantastic.
Chiellini, yeah,
nice to see everyone.
amazing.
It was amazing, right?
It sounds like you had a great vacation.
Nice to see everyone.
Great vacation, I said. Weekend.
Spent some of the weekend thinking about bonds too. Under surveillance this morning. Fed speak following a dovish Chair Powell.
The demons are at work. People are worried about a re-acceleration, or we eventually will roll into recession. They're waiting for a better buying opportunity. I think we can toss away the last 15 or so years and look at the period pre-financial crisis when there will be a demand for capital, there will be a cost to it, and there will be a productive use to it. So I'm very optimistic.
Here's the latest this morning. Fed speak returning this week. We'll hear from Bostic, Gorsby, Cook, Waller and Daly before Chair Powell again on Friday. Investors looking to see where the committee stands ahead of core PCE, the Fed's preferred inflation gauge to round out the week. Sonal Desire, Franklin Templeton writing this, quote, "The last mile of disinflation is going to be a lot harder than markets expect, and the Fed will need to be very patient on monetary easing. The new equilibrium we're trending to will have markedly higher rates than we've been used to in the pre-inflation surge period." Sonal, I'm pleased to say, joined us now for more. Sonal, let's get into that. I just want to start with the first piece of it. Ultimately, if the Federal Reserve is willing to accept higher inflation for longer, and you believe this journey could be a whole lot longer, where does it leave your view on fixed income?
Actually, I like fixed income here. The only thing is people have to adjust what they expect to get out of fixed income. It's time for fixed income to do what it says on the can, which is to deliver kind of boring returns. So I think it's largely carry. We are not looking for massive capital gains, certainly from here on.
Where across the curve do you prefer? So on the front end or further out, 10-year plus?
So, we have been neutral for a while, but between 425, 450, we have been adding duration. We've been slowly adding to that duration position. Clearly, spreads are extremely tight, but one has to look for pockets of value wherever we can find them, unusually and terribly tight, let's say right now, on most of credit spreads.
This is a reason why I find it compelling that you see actually the neutral rate as being closer to 4% than 2.5%, and yet you still are investing in longer term bonds that are close to that 4% neutral rate. How do you square those two ideas?
So, like I said, we're neutral and we're only slowly getting there. Now, why would I say that long-term rates might end up between 425, 450? Mainly because there are some distinct differences in technicals now relative to pre-GFC. Globally, we have interest rates which are way, way lower, and you have a massive amount of outstanding liquidity, which isn't really going to go away. The Fed is talking about sitting on a balance sheet which is far larger than it used to. It continues to actually, if it decides to ease off on balance sheet tightening sooner than bring that balance sheet back to something like 4 trillion, say, so you've got an extra couple of trillion to support. If the Fed decides not to start that process of runoff of the balance sheet runoff, for want of a better word, at that stage, the Fed actually continues to be a player in the bond market. So I think you've got additional sources of demand, and that's why you look at the all-in yield and recognize that you're not really going to get fair value, which I would say is probably closer to 5 or above 5.
This is kind of shocking to me because pretty much every investor who's come on this show says longer term there could be risks, whether this is a mid-2000s or a mid-1990s type of scenario. But in the near term, there's no reason not to buy. It is a risk-on environment across asset classes. Is there a medium-term risk to this about exuberance or some other consequence?
The medium-term risk is going to come from the fiscal side. I think that issuance is a wild card. Neither the Democrats or the Republicans, essentially nobody, no politician has a desire to reduce the fiscal deficit. Longer term, that's something which we are going to be watching extremely carefully, especially if it appears that inflation really comes down even slower than I think it'll come down. I'm not anticipating a reacceleration. If we got anything like that, I think that's a very significant risk.
I love this take from Drew Matters of MetLife this morning. Just writes in, Sonal, I want to share this quote with you. The ability of the Fed to manage inflation above 2% assumes a level of control and understanding of inflation that they do not possess. It's called hubris, and it doesn't tend to end well. Can you talk to me about your understanding of inflation and whether you think they possess an understanding of inflation that would allow them to control inflation somewhere between 2 and 3%?
So, here's the thing. I'm an economist, and I think that a certain degree of being humble is necessary. None of us get it, right? None of us completely understand this. What my baseline has been for a while is that it's not purely monetary. It is fiscal and monetary. The move from 9 to around 4 was always about the low-hanging fruit and the supply chains that Powell often alludes to. But 4 to 2 is also a function of things like wages, of the fact that financial conditions are so easy that people feel comfortable continuing to go out and spend. And you have consumer demand, which is pretty robust. And that's why maintaining between 2 and 4 without that reacceleration certainly is a risky proposition. And that's why I think that the Fed is going to be a bit more prudent, I would hope it is, and only start easing much later in the year than the June that markets are currently pricing.
So now I'm looking at the price of oil going up steadily. We're now north of $85 on Brent. How concerned are you about supply shocks and that impact on inflation?
So supply shocks are just an added variable. It is 85, and with what's going on in the Middle East, certainly, and of course the always background of Russia and Ukraine, you could get an additional supply shock effect coming from oil. But historically, those have been somewhat more temporary, right? Unless they stick around for long enough to get us to second round effects. I'd say that if we got a sustained shock to oil, we'd get into a very difficult situation because that does have negative impact on demand as well. So you get a growth shock together with an inflation shock at that point. And that is a pretty ugly environment.
So now this feels like a little bit of a change for you. Can I just finish there?
Yeah.
Typically, you're going against the grain. Do you feel like the market has moved in your direction?
Oh, well, yeah. At this stage, it's difficult to be. I don't think I was ever against the grain simply to be against the grain. Over time, I'd say the market has moved significantly closer to where I have been calling it. I now see the extent of divergence coming more over the medium term, so over next year and the year after, where I continue to see, the Fed talking about 2.6. I hear 2.5, 2.6 constantly in the market. I hear that people who look at commercial real estate, they're horrified at the idea that neutral Fed funds might be closer to 4, because that's another, shoe that might need to drop if stable neutral rates are closer to 4 than less than 3. And I think that one I do have a strong conviction on, and that's the one area, Jonathan, that I think I'm still somewhat separate from markets.
Interesting. You're always one of the best, so no, this was great. Thanks for catching up with us. Solid design there at Franklin Templeton. The conversation continues. The third hour of Bloomberg Surveillance up next. Jim Bianco of Bianco Research, Duncan Alderud, the Buick and GMC Global Vice President, Neil Dutta of Renmac, and Stefan Slowinski of BNP Paribas. That conversation and a whole lot more still to come from New York City. This is Bloomberg.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. Mm-hmm. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it? Peacock.
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
This is Bloomberg.
I feel great because I feel post-financial crisis, we've sort of been in a la-la land.
What's been winning has continued to win and win, and that's been a great environment for passive investment.
Although valuations are high, they could go higher. Stocks are increasingly priced for perfection.
It's very difficult to think of not owning U.S. equity risk.
The momentum factor is very strong right now.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
This is like torture for equity market bears, isn't it? It really is. Just every single hour, Bob Michael at JP Morgan, I feel great.
Just having full on.
He was bearish a year ago. Let's be clear about that. This is a big change for Bob.
Now, the bearishness is just not being bullish enough. I mean, that's basically what bearish means. And we see upgrade after upgrade on Wall Street as everyone reassesses what the pivot from the Fed actually means.
New upgrade, Lisa, let's talk about it. Oppenheimer raising the S&P 500 year-end target to 5,500. I think that might be John Stolfus. If it is John was at 5,200 before, and you talked to him about upgrading his target, and potentially here we are.
Yeah, I mean, basically he didn't want to get ahead of himself, but he said, I'm going to revise things, and maybe I will. I mean, it's not that much upside left from here to get there. I mean, as we heard from Ed Yardeni, it didn't take long before we got to, we could get to 5,400, his goal, by the end of this week.
Big headline coming from Boeing. Let's move to the stock. Let's get Boeing up on the screen if we can in the pre-market. This just coming in. Boeing's Dave Calhoun announces his intent to step down as a CEO. That just crossed in the Bloomberg right now. The stock is higher in the pre-market by 2.5%. The Boeing CEO, Dave Calhoun, announcing his intent to step down, Lisa, as CEO.
And everyone's saying, what took so long? Because essentially everyone was wondering why he was still there after all of the mishaps and the idea that this is a cultural problem that doesn't yet have a seen bottom. And that, I think, is really now a question of, okay, who comes in? And what's sort of the cleaning house effort that they're going to do?
This is also taking place, remember, as the board is doing almost a listening tour, going around the country, talking to airline executives. We also note from this is that the chairman of the board is also resigning and will leave the board at Boeing's annual meeting in May. So there's a number of people in this announcement that are going to be moving at the very top level of Boeing, Jonathan.
The CEO saying he's been considering the transition for some time now. The CEO referring to the Alaska Airlines flight 1282 as a watershed moment. I remember the conversations we had immediately after this, Lisa, and we were on air, and we were talking about how long it would take for this plane to get back in the sky. And some analysts on the south side were talking like weeks. Then Brooke Sutherland came on at Bloomberg Opinion, and Brooke was the first to say there's a cultural issue at play here that might need to be addressed, that runs a whole lot deeper than just a one-off incident. And these are the kind of changes that I think Brooke at the time was pointing towards.
And she was talking about how institutionally, since 2019, they've really seen them manifest with an even greater manifestation since the pandemic. A lot of questions remain. Who replaces some of these officials? How do they change the culture? Have they identified all of the problems and what led to that? It still is an open question. Remember documents missing that the federal authorities were looking for? I mean, it raises this question of how do you get to a place where you can grow again and not just put out fires.
So if you're just joining us, there's so many different headlines here, it's hard to know where to start and when to finish. So a lot of changes at Boeing. The CEO issuing a message to employees announcing his intent to step down as CEO. This is Dave Calhoun. Basically, Calhoun is going to have this year as his last year as the CEO, saying he's been considering the transition for some time, but ultimately the Alaska Airlines flight was a watershed moment for the company. And then later a whole host of changes around this as well, including the new chair.
Yeah, we're looking at Steve Mollenkopf as the new chair, previously of Qualcomm, which is kind of interesting. Also announcing that Stephanie Pope was named the commercial airplane CEO. Very curious to see how this sort of indicates their effort at transformation, right? I mean, this is really going to be key as we parse through it. We'll get more details coming up.
We must still respond to the Alaska Air accident with humility. The message coming from Dave Calhoun right now must include a commitment to safety and to quality. Their stock is up in the pre-market by something like 2%. We'll come back to that in just a moment. Equity futures on the S&P 500, just to reset for you. Equity shaping up as follows on the S&P. We are a little bit negative. We're down by about 1/3 of 1%. Yields are a little bit higher by 4 or 5 basis points now at 424.14. This hour, we'll be catching up with Jim Bianco of Bianco Research on why he's in the no landing camp. Buick and GMC Global VP Duncan Aldred on the company's push to revive China sales. And Neil Dutta of Renmac looking ahead to this week's inflation data. We'll begin with our top story, coming off the back of a record-setting rally following a series of dovish central bank meetings. Jim Bianco of Bianco Research saying this: the Fed cannot randomly pick someday and cut rates. If they do, and the market thinks it is not serious about inflation, sell bonds. Fed dovishness only works if the market is convinced inflation is not a problem. Right now, it's unsure. Jim joins us now for more. Jim, are you unsure?
Yeah, I am. I mean, if you look at the markets, we've got the so-called everything rally. Except one thing has not been rallying with the everything rally, and that's been the bond market. It has been kind of meandering unchanged, especially if you go back to before the Fed meeting. It hears the Fed wants to cut rates. It looks at the data. It sees stronger data, higher inflation expectations. It also sees the Fed upgrading its inflation and economic growth forecast. And I think it's wondering, is this a good idea for the Fed to be cutting rates? Because if they're not careful, they could cut rates. And if the bond market's thinking that they're unserious about inflation, we could wind up with higher yields, not lower yields. I think that's what we saw last summer. When the Fed stopped raising rates on July 26th, the market was worried it was unserious about inflation. We were at 390 on the 10-year note. 90 days later, we were over 5% before it started to really believe that the inflation numbers were coming down.
You said last year that disinflation was transitory. Jim, you said that. You came out very early on and said it. I wonder, Jim, what you saw at the time that led you to believe so.
Just looking at the data, you're right. I mean, I was looking at headline CPI, and it has bottomed June of 2023 at 3%. And if you look at the data going forward from here, especially the March data should be very strong, and you're probably not going to be below 3% until the fall, if not the earliest, unless price of crude oil collapses down to $50. Then you'll get there. But short of that, you're not going to be below 3%. And what I saw was just that the housing data was staying stickier than everybody thought. The wage data was staying stickier than everybody thought. And in oil and energy prices, which matters for headline CPI, was also not really declining to the extreme that everybody wants. And I think that's still the case as we move forward.
When is it going to be something that the bond market wakes up to? Because right now it hasn't been a material sell-off. And frankly, bonds have handled this pretty well.
Yeah, they've handled it well, over the last couple of weeks, which I've said it's been unsure. But of course, the 10-year yield started the year at 388, so it's up about 40 basis points for the year as we end the first quarter. The other problem, or the other issue in the bond market, is everybody's bullish. Everybody thinks that Bloomberg had a story basically about, we're back in the curve steepening trade again. Everybody's losing money in that trade, but don't worry, it's going to be a good trade to wind up making. And that's really what the bond market is dealing with, is a lot of bullishness right now, but data that is not supporting it. So it's going to take some time. And I think if the data continues to come in stronger than expected and the inflation data stays higher than expected, the bond market will eventually turn towards higher yields.
Well, this is really something that we were talking about with Sanal Desai, and she said that she still likes duration, actually. And the reason why is just because of the wall of money. And it's clear that there's so much liquidity in the system that's got to go somewhere, and the ball of money is just going into every risk asset as well as bonds. How do you argue against that that's not going to persist?
Well, it is going to persist until the wall of money ends. And really, the biggest driver of that wall of money has been central bank policy. Now, I know they're doing QT, but they're also having their reverse repo facility roll off. I know this is a bit wonky. That's money that's outside the financial system that's getting pushed into the financial system that is creating more liquidity. That's within a couple of weeks to a month of ending. And then all of a sudden, I think the liquidity situation in the bond market or in financial markets generally is going to start to turn lower. And that wall of money is really going towards where it's treated the best, and that's cash. It's, we've seen $1.5 trillion go into money market funds, and they just keep booming to new highs. And why shouldn't they? They're the highest point in the yield curve. And that forward-looking thinker, Tom Keene, has now got a quadruple levered cash fund. And so I think he's got the right idea when it comes to where you should be.
That's right. He had his European tour last week celebrating. Jim Bianco of Bianco Research. Jim, it's good to catch up, buddy, as always. Just to recap some breaking news, if you are just joining us moments ago, Dave Calhoun, the Boeing CEO, announcing his intent to step down. For more, Brooke Sutherland from Bloomberg Opinion joins us now. Brooke, you pointed to this almost immediately after the Alaska Air incident. You said there might be cultural issues that need to be addressed, and you alluded to the fact that maybe there needs to be a change at the very top of the company. Brooke, you surprised this morning?
I'm not, because I think, change does start from the top. And I think that it's just been striking the degree to which Boeing has been reluctant to talk about this as a deep-rooted cultural problem. And I think you need somebody to come in to really look at everything with fresh eyes. Because remember, Dave Calhoun has been on the board since 2009. So he's been there for a very long time. And I think this is a company that is desperately in need of some fresh perspective. But now the question is, who do they get to bring in that fresh perspective? And I think, there's going to be a lot of eyes directed towards Larry Culp's way, just given the turnaround that he's been able to orchestrate at GE. Now, I don't know if he would be interested in this because he's got a pretty great job at GE right now. He's about to lead an independent GE Aerospace into a future that looks a lot brighter than the one that Boeing has right now. But that's the type of person that you need to really get in there and focus on the manufacturing that is at the heart of what Boeing does. They got a little off course as far as that's concerned, and you really need somebody who's going to drill down into those basics and produce airplanes that don't have any defects.
How do you meet that, Brooke, with the need for industry knowledge? So I'm looking at the change as well to the commercial airplanes CEO. So Stephanie Pope's been named, been at the company for nearly 30 years. Stan Deal is going to retire. What do you make of that transition?
I mean, I think that's another one where it just was not tenable to keep the management in place running the commercial airplanes division, because that's where a lot of the problems were emanating from. And so I think what you're seeing is Boeing trying to take accountability for the fact that there does need to be sweeping changes. And it's not just the CEO. It goes, down into further into the ranks of management. And so I think that's what the signal is here. But to your point, I mean, I think you need somebody with a lot of aerospace expertise. This is not a job where you bring in somebody from the auto industry or somebody from the healthcare industry who's a good operating CEO. You need somebody who knows aerospace, who understands airplane manufacturing, and how to get this job done.
Why did this take so long, Brooke?
Sorry?
Why did this take so long to have the CEO step down at a time when this company was coming under spiraling allegations and a lot of questions around the culture?
I mean, I think there was a reluctance to throw more chaos into the situation, which I can understand, that there's a lot of scrutiny on Boeing right now and a lot that it needs to figure out. And a management change does, add more variability to the process. So there was a little bit of that, but then I think it also goes back to what I was talking about. I don't think that this company, until quite recently, grappled how serious of a situation that it's in. And even on the earnings call, their most recent one, they were sort of talking about this as a temporary pause in production ramps for the 737, and I don't think that's the right attitude. The CFO was on the Jefferies conference call the other day and talking still about that $10 billion cash flow target that Boeing has out there, and they're not putting out annual targets, but they're still not backing off that $10 billion long-term target, and I don't think that's the right mentality now. And so I think, we're finally seeing a moment where they're coming to terms with the seriousness of the situation that they're in.
Will this ease any concerns the FAA has?
I mean, I would think that the FAA had to have been apprised of what's happening here. And, certainly they're going to be looking for somebody who will pay attention to all the manufacturing detail. I would think that, Boeing would be in close talks with the regulator in terms of what the go-forward plan looks like. And you want to bring somebody in who has that aerospace manufacturing expertise. So I don't think the FAA is going to be happy with, a surprise outsider with no expertise in this industry.
Brooke, the investigations are ongoing, and I just wonder, and this is a difficult question to give a direct answer to, so forgive me for asking it, but I'm just thinking out loud. Remuneration for Dave Calhoun, how is this going to be managed as he heads to the exit, given these investigations will be ongoing and we've got no idea where they land?
I don't know the exact answer to that. It'll be interesting to see, once we get the proxy filings and the terms of his retirement package to see what that looks like. But I will say, they didn't. Dennis Muhlenberg also stepped down, and there's certainly a history here for how this gets managed without going executive.
Brooke, appreciate your time this morning for reaction to this. Brooke Sutherland there of Bloomberg Opinion. Dave Calhoun announcing his intent to step down as CEO of Boeing. Boeing stock this morning higher by 2.3%. Up next on this program, U.S. automakers facing tough competition in China.
What you've seen from China is 3 years ago, net import-export on vehicles was zero. It was about zero. Last year, it was about 5 million net exports. So they've become a big player on the global stage very quickly. It's really quite amazing.
That conversation up next. Stock's negative 1/3% on the S&P 500, pulling back just a little bit. Update on the bond market. Treasury yields higher by 3 or 4 basis points. Under surveillance this morning, U.S. automakers facing tough competition in China.
What you've seen from China is 3 years ago, net import-export on vehicles was zero. It was about zero. Last year, it was about 5 million net exports. So they've become a big player on the global stage very quickly. It's really quite amazing. If you're Xi and you're sitting there trying to drive your economy, you're pushing the auto industry. It's your biggest employment base. It's your biggest sort of position of national pride, industrial manufacturing base. So they have a real position here to drive forward the industry
Here's the latest this morning. US automakers aiming to retain or regain footing in China as consumers in the world's biggest car market increasingly opt for domestic brands. GM in particular seeing a shift. Its US sales outpacing China last year for the first time since 2009. Joining us now is Duncan Aldred, the Global Vice President of Buick and GMC at General Motors. Duncan, good morning to you, sir.
Good morning.
We have to begin in China. I want to talk about what's happening there, what's behind the slowdown. What's your read on what is developing there and are things picking up as we kick off 24?
Well, China remains a really critical market in automotive. It's the biggest market in the world. It's about 50% bigger than the US vehicle market. And General Motors have enjoyed great success over a long period of time. And Buick in particular has been General Motors' lead brand there. We're still delivering over 500,000 vehicle sales per year there, and it really does remain a critical market for us.
What does the consumer want? Do you see a shift to domestic brands? What are you up against?
Clearly, the situation has changed. Domestic brands have become a lot stronger, but Buick does remain strong there. And increasingly, people are moving towards hybrids, EVs, and increasing technology.
How difficult is it, though, on the price war kind of front to really compete and also make a profit?
Well, the price sensitivity over there is great. And again, there's about 250 brands on sale in China. There's about 50 here in the US. So you can imagine the competitive situation is very difficult. However, Buick remains very, very strong. We've got the great lineup, the lineup that we sell here in the United States, increasingly introducing EVs and PHEVs as well, hybrid electric vehicles. And again, we feel well placed to compete going forward.
When you talk about here, I am wondering whether that's also been a challenge just because the electric vehicle demand hasn't been as great. There was a recent report in Cox Automotive that Buick inventory levels in particular so far this year have been a lot higher than other types of cars, even within General Motors. Do you think that that's a reflection of the lack of appetite for electric vehicles in the U.S.?
Well, we're not actually selling electric vehicles within the Buick brand in the U.S. yet. What we're doing, we've launched 2 brand new vehicles last year. We're launching 2 brand new vehicles in the first half of this year. By the middle of this year, we'll have what we expect to be the freshest portfolio of any brand in the industry. And the customers are really responding to it. It's a new design language, a new logo, and again, these totally fresh new products. Last year, we were the fastest growing mainstream brand in the industry, up 65%. This year, we've carried on that growth. We're up nearly 15% on a year-to-date basis. So really, people are responding to the new Buick products and design language in great fashion.
When you look at the China strategy, though, and to Lisa's point about this price war, I mean, BYD, once again, over this weekend is cutting prices. If you're going to go after the luxury market, do you need to cut some of the lower-end vehicles you're selling in China?
Well, what we've got in China is, again, a really broad portfolio of vehicles, PHEVs on the way, EVs already in the market, and, of course, the traditional combustion engine vehicles. Where we've been particularly strong and leading the market for Buick is in the people carrier space, so the minivan space. Now, this is a different minivan than we know here in the US. It's a very luxurious vehicle. The Buick GL8 has led that segment and continues to be an absolute leader in that space. And again, there's a lot more to come in product development going forward.
When you look at appetite for these bigger cars, is there more appetite in China for bigger cars? Because I know in the United States, that's why you came out with the Hummer EV, because there is this growing appetite to make sure even if you're going to be electric, you can have an SUV.
Well, our electric strategy here for GMC in the US started with Hummer, first of all, in truck format. Now we've introduced it in SUV format as well. Every month, the sales are better than the last month as our production continues to rise. And it really is an outstanding vehicle. We talk about potential slowdown, but the Hummer EV absolutely is ramping up. It's not slowing down. It is the world's first super truck. It is unique. It does go 0 to 60 in 3 seconds. It does basically everything you could want it to do. Now, coming on to China, we are about to embark on an export program to China with GMCs as well. More to come on that, but in about the next 12 months or so, we'll be exporting GMCs as part of a global strategy there. We're already now selling in Korea, we're well established in the Middle East for nearly 100 years, and we'll also be going to Australia. So GMC's strength continues to grow and grow. It really is an outstanding brand with outstanding success, and the introduction of EVs is also going to help us begin this export program.
Does it make life difficult when 2 of your biggest markets seem to have different consumer preferences? Is that tough?
Well, clearly, you've got to manage that. I mean, it's always been the case.
How do you manage that? Can I jump in? Because I was speaking to Mary Barrett a few weeks ago, and we were talking about the prospect of GM leaning more into hybrids. And I was trying to work out how easy is it to toggle between pure EVs, ICE, hybrids. How quickly can you get a factory line to do that?
Well, the beauty of somewhere like General Motors is we've got technologies on sale across the world. So clearly you leverage those technologies, whether it's the combustion engine, whether it's the EV, or indeed whether it's the hybrid or PHEV as well. So once you've got that technology developed, yeah, it's not super easy to then transfer it into another product, but once the technology developed, which invariably it is within General Motors, that is something you can do. And that's why we've maintained a position saying we'll always respond to the market. And if the market is increasingly wanting hybrids of any description, then we'll pivot to that, and we're well placed to do so.
Do you see that's where the market is right now currently?
I think it's going to be part of the development. We still maintain that an all-EV future, we still maintain a zero-emission strategy or vision is what we want to achieve, but I think hybrids will be part of that journey to get there.
I'm always interested by the zero-emissions climate push as well. When I hear about the electric, the EV Hummer, I've got to ask you this question. I ask it out loud all the time. How on earth is that good for the environment? I've seen the size of these things. They are massive. How is that good for the environment? How do we understand that?
Well, they're nowhere near as big as you think, first of all. I think I was just saying, I actually bought one. It's not a company car, I bought one. It's the best vehicle ever you could buy. It's really easy to drive around town. Here, like somewhere in Manhattan, it's super easy. Four-wheel steer, make it turning circle the size of a small car.
Creating potholes because it's so heavy?
No. It's got air suspension, so it glides along the potholes of this great city. The roof comes off, making it a convertible vehicle, 0 to 60 in 3 seconds. It goes really anywhere off-road. It's got something called extract mode. And of course, if you're on the highway, it drives hands-free with Super Cruise technology. So this really is the world's first super truck. It's an outstanding vehicle. And again, 0 tailpipe emissions.
Okay, but to make the thing?
To make the thing?
Well, that's what I'm getting at here. 0 tailpipe emissions, I understand that, but to make an electric Hummer, an EV, are we saying that's good for the environment?
Well, clearly we're very responsible in the sourcing of materials that go into the batteries that then create the Ultium battery and technologies that go into them. So we're very responsible, not only on the tailpipe, but on the holistic nature of that battery development as well.
I've seen them, they're big. Duncan, thank you, sir. Appreciate it. Duncan Aldred, I'm not sure how that works around Manhattan, but that was quite a pitch.
Well, I'm just wondering how you get a parking spot. I mean, just a practical kind of consideration. And if people double park, then it's a problem for the buses getting through. That's been an issue recently.
What, driving your Hummer around Manhattan?
Yeah, that's been my ample experience driving my Hummer, blocking the buses.
Duncan Aldred, the Global VP of Buick and GMC. Thank you, sir. It's good to see you. Coming up next, Neil Dutter of Renmac from New York City. This is Bloomberg.
times in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Stock softer here by a third of 1% on the S&P. Bramo converted. Electric Hummer.
Oh, yeah, totally.
Around Manhattan.
Oh, yeah, I found a couple parking spots. Nowhere.
You know when they dig up the roads? You know they're digging up the roads?
Yeah.
6th Avenue right now. 3rd Avenue, part of Park. I mean, seriously, just like on and on and on and on.
They should just have a sign outside of Manhattan saying construction, under construction.
Constant.
Perpetual under construction.
Constant. That's what it feels like. Then the roads are smooth for like 5 minutes. And you're going to write in and say, it's the weather. Yes, I understand. Okay. Equities on the S&P, down a third of 1%. It doesn't mean it's good, does it? The NASDAQ, I'm just arguing with myself, down a half of 1%.
It's that kind of morning, huh?
And that sort of pro-New York vibe, you know. I'm pro-New York, but when it comes to any complaint about it, it's just sort of like, yeah, but we have to do this because of the weather.
I'm a native New Yorker, and I will just say, self-deprecation is part of it. We all know that there should just be a big sign that says bump before Manhattan, that there should be a big sign that says potholes, beware. We're fully aware. It's okay.
Also, John, you could just go underground and then you won't feel it.
True, yeah. That's a good point.
Really?
That's a good
Want
point.
to start that one?
Let's get to the bond market. 2-year, 10-year, 30-year. Yields look like this morning, drifting higher, up by 3 basis points, 422.76, up 2 basis points on a 2-year, 461.26. I'm just saying, given how much we pay in taxes, you'd think that the roads were smoother. That's all I'm saying.
You'd think that there wouldn't be signal malfunctions on the subway.
Precisely.
Exactly.
All
Lots
of that
of
stuff.
things.
All of the above. Let's finish on foreign exchange. You sort of interject with commentary about the city as we go along. The euro, 108.32. Under surveillance this morning, just finding out moments ago, this hour, Boeing announcing a series of leadership changes. President and CEO Dave Calhoun is set to step down at the end of this year. Stan Deal, the commercial airplanes president and CEO, is retiring effective today. The company saying Calhoun's move will stabilize the plane maker. The changes come after a series of mishaps and investigations, including a mid-air blowout aboard an Alaska Airlines flight earlier this year. The fact the stock is up, I think, speaks volumes, Lisa. We're up by almost 3%.
You know, what Brooke Sutherland said was really telling, that they didn't understand the scope of how serious this was at the outset. Maybe this is the beginning of the recognition. This is massive for them, and they need a sea change culturally as well as just with respect to their safety protocol.
These are the cultural issues that Brooke was talking about.
Absolutely. The issue you hear time and time again when it comes to Boeing is that issues that are happening on the factory floor are not getting to the C-suite. And look at what you mentioned earlier, these documents that Congress was after. They actually cannot find these documents attached to potentially some of these issues they were trying to remedy. What's interesting, though, is he's stepping down the end of the year. So that says to me that they don't have a successor ready to go. This is going to take a few months.
Do you believe that they can't find those documents?
Not for me to say whether I believe or not. What I will say, though, the fact they can't speaks to the way this company's been managed over the years.
That was diplomatic.
Doesn't speak to it in a good way, right?
Well, this is part of the problem. I mean, we don't even understand the scope of the problem, and there's not been any good news. I mean, really, has there been any sort of ray of sunshine that they've overhauled anything or they found something positive?
No, every time we've covered this company, it's been more bad news. Every single time.
Maybe this is a tipping point.
The stock is up by something like 3%, and maybe for investors, what we heard in the last 30 minutes wasn't bad news. Maybe That was the first piece of good news. Apple, Google, Meta. In the antitrust hot seat this morning, on the other side of the Atlantic, EU regulators announcing a full-blown investigation into whether the tech giants are complying with the Digital Markets Act. Apple and Google, in particular, under fire for allegedly monopolizing browser and search engine usage. Meta's subscription fees also in the crosshairs. The companies facing potentially hefty fines of up to 10% of global revenue, or up to 20% in the case of repeated breaches. Now, your response to this, Lisa, the same as mine initially this morning, which was like, here we go again in Europe. Then you speak to the experts. So Mandeep Singh, Bloomberg Intelligence, Alex Webb out of Bloomberg in London, both saying that maybe what we're hearing this morning, at least in the immediate term, could be bigger than what we heard last week from the DOJ.
That's exactly what I was going to say. I was wrong. I absolutely had the wrong interpretation of the story when it came out, which was yet another suit. To me, there is a bigger question of how much is this the utilitization of big tech, of the behemoths that control so much of the infrastructure that people use to communicate. How much is this regulators on both sides of the Atlantic saying, we want to have more control, and that's going to limit your profitability longer term?
Mandeep also made the point that this could be imminent. They could be facing these fees imminently, while when it comes to the DOJ, this is going to take months or years. While when it comes to Europe, they're going to be cracking down immediately and potentially getting up to 10% of global revenue in terms of fines.
Yeah, and just to pick up on what Lisa said a few times already in the last few hours, it's not just the fines, it's the potential behavioural changes as well that could be pushed through, and pretty soon. Bear in mind, we were looking for a new phone in September and maybe a partnership with Google's Gemini, and Mandeep Singh throwing a bit of cold water over that earlier on today.
Hard to see how they could have data sharing if people are worried about the dominance of both companies. So what next for their phone? Can they compete really with Samsung, given the fact that they are, by all intents and purposes and by all reports, behind on the AI front?
That's the latest on big tech. Let's push forward a little bit. More Fed speak on deck through today, kicking off with Goolsbee, Bostic and Cook. Wallace speaks on Wednesday, ahead of Daly and Powell speaking on Friday. Markets kicking off a shortened week, set to end with personal income and spending data, plus the Fed's preferred inflation read, core PCE. That's going to come on Friday, Lisa, when the market is closed, and hopefully no one comes in to this room at the end of this show and says, special program Friday morning.
You think that really? Why would you even do that?
It's not that important.
Really?
Everyone will be away and they'll pick up and talk about it Monday.
No, public service announcement. We already know what it is because Jay Powell leaked it. So we already know it's 0.3% for the headline. And so we can just carry on.
Dear management, we don't need a show because he told us the number already.
Why would you?
Yeah?
Why would you?
Good.
Why would you even bring that up?
Giving people ideas.
Don't worry, there won't be a show. Stocks pausing on the back of another record week. We love doing shows for you. Fueled by the Fed's latest confirmation, we really do. It will cut sometime this year. With the market on track for its 5th consecutive month of gains, I'm speaking to management, not the audience. Neil Dutta from Mac. We love doing it for you too. Here's the quote. Neil, the markets rightly viewed the Fed decision as dovish, hence the rally in stocks and bonds. The risk is that January and February's inflation data represent a series of higher than expected inflation prints. Ultimately, Powell sees the stance of monetary policy as very restrictive. As a result, he's more on alert for downside surprises to growth than he is upside surprises to inflation. Neil, I'm pleased to say, joins us now for more. So Neil, let's get into your framework. I remember a line of yours at the end of last year. I remember you sent me a message and you said the labour market is no longer a reason to be hawkish. And I thought it was really important at the time because it wasn't just that the labour market was somehow weakening or deteriorating. It was that even with labour market strength, even with economic growth, that was no longer a reason per se to be hawkish. Neil, can you just walk us through how you're thinking about the economy with that in mind?
Yeah, sure. Thanks, John, for having me on. Well, you know, compensation growth equals inflation plus productivity, okay? And we know that compensation growth is moderating. You know, there's a lot of focus, of course, on wages because that's the monthly data. But, you know, remember that benefits are slowing a lot more rapidly than wages and salaries. And in theory, workers bargain over their entire compensation package. And when you look at quits are basically below where they were just before the pandemic. And it suggests that broad measures of compensation growth, like the employment cost index, will be you know, somewhere in the vicinity of 3% by the end of the first quarter. Now, if you have 3% compensation growth, and we know that productivity is normalizing to around 1.5%, where's the inflation coming from? So if compensation is 3, maybe 3.5, and productivity is around 1.5, then you're at the Fed's underlying inflation objective of 2. So there's a lot of focus right now on things like goods prices, producer prices, You know, as I mentioned last time I was on the program, Lisa's very focused on chocolate prices.
Very.
But there's limited pass-through from those things into core consumer prices. And I do think that the normalization of labor market conditions will take a lot of the pressure off of services, which are running, you know, well above what they normally run above with respect to goods prices.
Now, one take that we heard last week repeatedly, I think across the street, including from yourself, was that the Fed was embracing the supply-side narrative. Could you briefly describe that a little bit more broadly and help me understand, how do you set monetary policy when it's the supply side doing all the work?
Well, I mean, I think first it's important to understand why the supply side looks better. I think that's primarily a function of normalization dynamics following the pandemic. So, you know, this time last year, labor productivity growth was deeply negative, and now it's normalizing. That essentially raises the speed limit for the economy. So if you have stronger economic growth, as Powell mentioned, I mean, you could have stronger employment and economic growth without necessarily pushing inflation higher. And I think that's why it's important. It gives the Fed room to kind of recalibrate policy. But, you know, I mean, that's why it's important. You know, so productivity's up. That gives the Fed a little bit more space to ease, you know, modestly if inflation's slowing more quickly.
Neil, I'm having a hard time, and I'm having a hard time for a number of reasons, partly because it's very hard to find people who can really pose some sort of negative case. But there is one to be made with the data that is coming in hotter than expected in certain areas. You talk about the fact that wage inflation seems to be nowhere. The New York Fed has a new measure of trend wage inflation that Torsten Slok put out this morning, saying that it's currently running at 5% and looking pretty sticky. Other measures showing that inflation is reaccelerating, with Jim Bianco saying this no landing is going to pose a real problem for bond markets. How do you dismiss those things out of turn and retain faith in the disinflation story?
Well, you have to go to first principles. I mean, I'm not a big believer in indicator macro. I don't like going and saying, look at this indicator, see, you know, it's up. Well, I mean, that's, again, yeah, as I mentioned before, I mean, looking at the wage number, that's one thing, but people bargain over their entire compensation, right? I mean, that's just, to me, that's a red herring to distract people from the best measure of compensation growth, which is the employment cost index, okay? You know, there's minimal pass-through from goods into core consumer prices. But as I mentioned, first principles. Where is the acceleration in household and corporate measures of inflation expectations? Where is this showing up in earnings calls? Where? I mean, Costco's talking about basically holding the line on prices. Walmart's talking about bringing their rollback back. So, I mean, if households expect inflation to basically be, you know, I mean, those expectations have been coming down in the last few months. It would suggest that, you know, the inflation upside surprises that we've seen in the realized data will be fleeting. Well, but I'd also point out, Lisa, that inflation data has been generally on the weaker side of the consensus overseas. Interesting. It would support the idea that I think the Fed is putting a lot of currency into, I think rightly, that that residual seasonality is a big driver of why the inflation numbers looked a little bit worse in January and February.
Then, Neil, if that's the case, do you reject this idea of a reacceleration of the economy in some sort of material way and a broadening out around the world and say that that's premature because there is more weakness under the hood and, frankly, challenges to certain businesses that don't have the pricing power that would suggest that the Fed was justified in cutting now?
I think, to me, the strength of the economy, that's a reason to expect a ceiling on how many cuts the Fed can deliver. It's not a reason for the Fed not to cut at all. I think part of this is we're all very used to the Fed cutting a lot or not at all, because primarily it's, you know, they're cutting aggressively to stop a recession from gaining hold, or they're already too late, and that's why you're in a recession, you have to cut a lot. What I'm talking about is just a recalibration of policy. It's difficult to see the Fed cutting 6-7 times because, as you mentioned, the economy's strong. But if inflation is falling, they can at least adjust policy a little bit to kind of reset the economy. This isn't a outright easing. It's just simply taking policy from significantly restrictive to maybe a little bit less restrictive. That's all. I mean, this isn't like a broad wholesale change. I think that's kind of the sort of thing that people are getting, I think, in my view, confused by. This isn't a wholesale change of policy. It's simply a recalibration of monetary conditions.
Neil, I'd like to finish there because I think those words are really important. Just how bullish the reaction function of the Federal Reserve actually is, because many people ran away with the idea that it was super, super bullish. Neil, I just wonder how close we actually were to having a very different conversation. If that median dot had shifted from 3 cuts to 2, and it was very close to doing so, do you think the conversation would have been very different after the Fed meeting Wednesday?
Not really, because what would have happened? My sense is that the the markets probably would have sold off a little bit. Certainly the expectation going into that meeting, John, was that, we were kind of gravitating. The risk was for 2 cuts instead of 3. And maybe if they penciled in 2, the markets would have taken that and sold off a little bit. You would have seen a modest tightening of financial conditions. But then guess what? Chair Powell would have come out, struck the same dovish tone, and then markets would have rallied. So I don't know. I think the big story is they're cutting. They're just not cutting as aggressively. The strong growth in the economy puts a ceiling under how many cuts they can do, and that's also in the dots. That's in the outlook for 25 and 26.
Got it. Neil, great to catch up. Got to do it again soon. Neil Dutta there of RenMac on the latest in the economy and on the Federal Reserve as well, Bramo.
Basically just aggressively bullish. But in a good way, right? He's gotten it right. At the same time, this is really the debate. Is there more disinflation than people realize? And if so, is the Fed cutting just a touch to be neutral? This is really the key debate, and people don't want to take them at their word.
We'll get another piece of data on Friday morning. Equities right now on the S&P negative by 1/3 of 1%. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Hackers. Hey, Yahira.
Hi, John. Former President Donald Trump faces a deadline today to post a bond to cover a roughly $500 million civil fraud judgment against him. Otherwise, New York State can start the process of seizing some of his assets, including real estate in Manhattan. Trump will also be in court today after being accused of falsifying business records to disguise hush money payments before the 2016 election. Treasury Secretary Janet Yellen is set to visit China next month for meetings with senior leaders, according to reporting from Politico. The trip follows Yellen's meetings in Beijing last July, which resulted in the formation of a working group with China, promising, quote, frank and substantive discussions on matters involving economic and financial policy. Goldman Sachs says the S&P could hit 6,000 this year. Strategists led by David Kostin are sticking with their year-end target of 5,200, but have a scenario in which tech megacaps could lead the index up another 15%. The S&P is up almost 10% this year and closed Friday above 5,230. That's already left many strategists' year-end forecasts in the dust. That's your Bloomberg Brief. John?
Yahira, thank you. Up next on the program, Boeing CEO stepping down.
We caused the problem, and we understand that. We instituted additional quality controls and inspections at Boeing and at our supplier.
That conversation up next.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
multi-trillion dollar industry. There's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Stocks on the S&P 500 down by about 0.25% on the S&P, slightly softer, negative, 42 minutes away from the opening bell. Yields are a little bit higher throughout much of this morning. We're up a couple of basis points on a 10-year, 421.98. Quite a quiet start so far to the week ahead. Picks up as the week progresses. Under surveillance this morning, Boeing CEO stepping down.
We caused the problem, and we understand that. We instituted additional quality controls and inspections at Boeing and at our supplier. We issued bulletins to suppliers to strengthen the focus on conformance and reducing the risks of quality escapes.
It's the latest this morning. Boeing announcing CEO Dave Calhoun will step down at the end of the year after a string of mishaps and investigations at the plane maker. In a letter to employees, Calhoun saying, quote, "The eyes of the world are on us, and I know that we will come through this company, this moment, a better company." Joining us now is George Ferguson of Bloomberg Intelligence. George, let's get straight into this one. The names will change. How is the leadership going to change?
Well, I mean, I think they need to go out and get themselves, Boeing needs to get themselves a very good CEO that's from a manufacturing and an engineering base and not so much a financial base. And so it remains to be seen who they go out and find, but I think that's the next big order for Boeing.
George, this felt like it was on the table from the very beginning, but not for the company. It's something that Brooks Sutherland alluded to, that perhaps they didn't realize how big this might turn out to be. When do you think the defining moment for them actually was in the last few months? When did they realize that maybe they need some big changes?
I mean, to me, the defining moment was just all the, actually, I think it was more a death of 1,000 cuts, right? It was just all the little problems that were coming through the manufacturing process, especially at Spirit Aerosystems, of just airplanes that just weren't completed correctly. And so I don't think it was any big event, but just the constancy of the problems coming out that were the beginning of the end for this.
George, as they search for another chief executive officer, how much of a liability is it that there isn't a robust, multi-pronged industry here with many players, that there really is just a duopoly, one in Europe and one in the U.S.?
No, I think it's definitely a challenge because of that. I don't think there's a wide talent base here, but I think the suppliers also are probably a fertile ground potentially for another CEO. I think especially as you get into some of the engine manufacturers, there may be some talent down there they can go find. That business is a super tight tolerance business, heavy engineering business. I think that's what they need for the next CEO. So I think you'll see it broader. You'll see it inside the supply chain as well, and maybe even outside. But I think it has to come from a really strong manufacturing, someone with a really strong manufacturing background and engineering background.
What do you think this means for how quickly they can reach a deal with Spirit Aero, how quickly they can incorporate the trouble child, really, that they've blamed for a lot of the problems?
Yeah, so it's interesting, right? Because I think they said Calhoun's going to finish out the year, which to me seems like a long period of time to do this transition, because I feel like they really need to build confidence now, and they really need to get on the road to fixing the company now. And so I would hope this doesn't mean Spirit Aerosystems is pushed off until next year sometime. I think that's already well underway, and I would think it would continue, and they would try to get that closed as soon as possible, because I think the road to success goes through that acquisition. The road to successfully stabilizing and improving quality for the 737 goes through Spirit, and so I think they can't wait on it.
George, what do you make of the fact that the board has been doing a listening tour and meeting with airline executives, but without Calhoun there?
Well, I mean, to me, when I heard that was, I thought that was a clear sign. Well, one, their most important customers were very concerned and wanted to meet with the board. And without Calhoun there, to me, that was a clear sign that they were probably pushing to get a change to the top of Boeing. Again, they need a confidence builder, they need an operator, and I think the airline CEOs saw that and brought that to the board.
Given the fact that you think this person needs to be an engineer mind, do you think this is ripe for potentially a split in this job? Someone who's definitely focused on the financials and someone else who's focused on the engineering and the safety of these planes?
I'm sorry, I didn't catch this. Say that again.
Well, do you think this could be a moment where you see almost a split at the top for how Boeing is run? Someone who's an engineer mind versus someone who's more financially focused?
Well, so, I mean, you know, every organization has sort of their top engineering officer, their top safety officer, and Boeing's no different. So they've already got that inside the structure. I don't see a split so much. I think that the CEO of Boeing knew, whatever the new CEO is going to be, they need to be someone that's really had a really strong amount of experience, again, sort of in quality manufacturing and with good engineering at the core of the business that they ran. So I still think it needs to be inculcated all the way at the top, and you can't necessarily split those job roles up. You need someone that thinks that way, I think.
Hey, George, appreciate the update. Big change. George Ferguson there of Bloomberg. That stock is up by close to 4%. We talked about that defining moment. AMH, I think you alluded to it. That meeting, no CEO.
No CEO. The board's on a listening tour. They're meeting with all these airline executives. We talked about it last week. And notably missing was going to be CEO Calhoun. And I think a lot of people thought, well, if he's not going to be there, these airline chiefs going to be complaining about him and how he's running Boeing?
I just also wonder about the talent pool of people who are actually in the industry, who can come from outside, who will have fresh eyes. If you don't have a real competitor, how do you get that talent? And that it's a real issue. It's with
the pool's in two companies.
Exactly. And this is sort of, one of the challenges in having the fresh ideas and the gut check that comes with a robust competitive environment.
Maybe Bruno Le Maire has an idea of someone from Airbus they can send over to Boeing?
Yeah, I'm not sure they want to lose anyone, do they? Not at this point. Coming up tomorrow, the coverage continues. Max Kentner of HSBC, Pooja Sriram of Barclays, Julian Emmanuel of Evercore ISI, and Citi's Andrew Hollenhorst. I have to say, looking forward to the conversation with all four of them. But Max Kentner of HSBC, very interesting year. So Max starts the year, comes out, he's been bullish the whole of 2023, starts 2024, says reverse Goldilocks. The economy's going to be too strong. The Fed's going to have to back away from all these cuts. It's going to be negative for risk. Now, I would say he got like 75% of the story right. The problem was he got the market piece wrong. We'll talk about that tomorrow.
And he basically is backtracking on it and seeing how this could be, something that continues. It's the wall of money. How many people have we heard that from? There is a wall of money, and it keeps going into asset classes for far beyond any kind of rational rally, which will lead to exuberance, but not for a couple of years, so keep buying.
Constructive on the equity market and constructive on pretty much everything else, right?
I mean, it's the everything rally.
HSBC.
The wall of money.
From New York, what was that?
It's just like, firepower into the market.
So
I'm not going to do that again.
Welcome back to another Miami Open update for Bloomberg TV and radio from Tennis Channel. The reigning U.S. Open champion Coco Gauff cruised into the round of 16 with a dominant display against Oceane Dodin. From 4-2 down in the opening set, the American went on a tear, taking the last 10 games of the match to close out the comfortable victory 6-love in the second. And don't forget, Tennis Channel's live daily coverage starts at 11 a.m. Eastern.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on
that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Timelessness and sustainability go together, right? You can't expect to be timeless if we're run out of resources. So for me, sustainability is not a side activity. It's not a reaction to external pressure. It's core to who we are, what we stand for. And to a very strong extent, it's about future-proofing our business, right? You need to focus on sustainability to recruit. More and more, that younger consumer we're talking about, they want to work for companies that care about this planet, that do more than just kind of generate revenue and profit. You need sustainability to attract consumers. More and more, including that younger consumer, they care deeply about what are you doing differently? How are you making a difference? Investors, particularly in Europe, more and more place value on what you're doing in sustainability. Many of our partners have expectations on sustainability.
From New York City, for our viewers worldwide, a very good morning. I'm Manus Cranny in for Jonathan Farrow. So euphoria is interrupted temporarily. We've got the chips under attack. They're lower this morning by Intel, down. NASDAQ under pressure. We'll discuss the chips issue. Countdown to the open kicks in right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Coming up, stocks take that breather after the best week of 2024. Boeing CEO steps down. The fallout grows over safety issues, and Goldman's mega cap bull case pushing back against the warnings of excessive exuberance. We begin with a big issue. Have stocks run up too far, too fast?
This is starting to possibly be reminiscent of the 1990s, and if you ask me where we are in the 1990s, I think we're at December 5th, 1996, where Alan Greenspan asked, how do we know if it's irrational exuberance? And I'm concerned that the market would go up too fast. I mean, it's great on the way up. Melt-ups are wonderful, but by definition, they can lead to meltdowns. And so that's where my concern is.
Joining us now to discuss it is Cameron Dawson of New Edge Wealth and Nadia Lovell of UBS. Thank you so much for being with us. Cameron, to you first of all, is it 1 minute to December the 5th, 1996?
Well, certainly we've had this massive move that has pushed valuations up to 21.2 times forward, which is pretty extraordinary because the only times we've seen valuations higher than this were during COVID and then during the tech bubble itself. So when we think about this market, I think we have to have two minds. One is respecting the short-term momentum. We're seeing things like breadth improve. Typically, breadth isn't improving into a market top. It tends to deteriorate as the market is nearing a top. So the opposite now is happening. But then also realizing that things like positioning, sentiment, and valuation are all very stretched. The challenge with those, they're very poor timing tools, and they need some kind of catalyst to cause an unwind. So it really is that short-term momentum countered by the fact that medium-term measures are stretched.
Nadia, good morning. There's a very sort of stability-orientated view. Give me yours. I mean, Ed, being very concerned that it is reminiscent of the 1990s, yet everybody comes in here and they tell me the earnings will sustain and maintain the drive higher in stocks.
Yes, I mean, we are sort of have a more balanced view right now on the markets. I mean, coming into the year, we were quite constructive on markets, and markets has been performing better than our expectations. I mean, already at our year-end price target. So it does suggest that there's a certain level of productivity increases that's being priced into the market given where valuation measures are. But that said, the economy does remain in good shape, and earnings revisions are happening. It also suggests to us that, you know, with this economy continuing to chug along and financial conditions are likely to ease further, the Fed has already hinted that there are interest rate cuts on the horizon. It feels like the path of least resistance for stock is up. And then you have, you know, a pretty low volatility environment, both from an equity standpoint and a bond standpoint. So it does suggest that that supports risk on, and there are dip buyers in the market. And so it feels that even if we do get some consolidation from here, that it's likely not to last for very long, nor be very deep.
It's interesting when you listen to some of the more veteran speakers in the market, the likes of Bill Gross talking about buckle up for excessive exuberance. You mentioned Fed speak, so let's just dig a little bit deeper into that pipeline. The latest from Raphael Bostek saying this: the economy continues to deliver surprises, and it continues to be more resilient and more energized than I had forecasted or projected. And as a consequence, I've sort of recalibrated where I think it's appropriate to move. Mike McKee is with me. So is this a missive, a message from Bostek, a subliminal message, or is it a Lone Ranger who wants to move to one cut, Mike?
Don't know if he's a Lone Ranger, because there are a couple of people who have moved up the Fed dot plot. Raphael Bostek now says just one cut this year. He made those remarks on Friday and repeating them again this morning as we get into Fed speak, post-meeting time period. We've got a number of Fed officials speaking today. Austin Goolsbee from the Chicago Fed comes a little bit later, and then Lisa Cook talking about the dual mandate. She's a governor on the board. We don't have a lot of economic indicators this week. We have new home sales and durable goods orders coming up. But Wednesday, Chris Waller, everybody follows him to see what's happening. And then Friday's the big day. Friday, we get the PCE inflation report that everybody cares about, particularly the Fed. And then we get Jay Powell's reaction to it, and nobody's going to care because the markets are closed and everybody's going to be on holiday. It's a very weird calendar schedule for the week, but I guess a week from today we'll be talking about it. We are expecting the personal income and PCE inflation report to come out and show that incomes increased, which increased spending, and the headline PCE and the PCE core remain relatively strong. They're much lower than CPI, but they're still in the mid-twos, so the Fed has a ways to go there. And I might mention, Manus, because you brought this up with the subject of your program today being the stock market continuing to rise. That's one of the inflation problems we have. Take a look at PCE inflation, and it has been heavily influenced by the market these days. You can see the blue line is the PCE inflation that's been rising right along with the S&P 500 because those fees continue to rise and commissions continue to rise as the market continues to go up. So I call it the pogo problem. We have met the enemy, and he is us.
Never deprive a broker of a decent-sized ticket with a bit of commission. That's from a veteran. Mike, thank you very much. Mike McKee, setting out the agenda for the week. My guests this morning are Cameron Dawson and Nadia Lovell, still with me. Cameron, you would say time to roll out the five-year break-evens and walk in and just put it on the desk in front of Powell and go, what are you going to do there, buddy?
Yeah, this is so very important because he talked about inflation expectations being anchored. But if you look at those market-based inflation expectations, they have moved significantly higher this year. Now, some of that is from oil prices, from gasoline prices, mostly on the shorter end of things where there is a high correlation. But it speaks to the fact that there are some underlying inflation dynamics that are causing a reacceleration. Now, Powell was really eager to write off what happened in January and February with the CPI. The question is, if that trend continues of hotter inflation, will that really give the Fed the degrees of freedom that it would like in order to cut rates? And we think that the risk is that it doesn't, which just means that Bostic may prove to be correct with just one cut or fewer than 3 cuts this year.
It's only going to be interesting. I mean, we were neurotic whether we go from 3 to 2. That event didn't happen in the dots, did it, Nadia? I was reading Torsten Slock's research this morning. He talks about sticky wage inflation. The New York Fed, this was actually quite shocking. The New York Fed model has 5% on wage inflation. That is a country mile, or in American speak, that's 3% away from the target. So, Nadia, when you look at the break-evens, when you look at the Fed model when you look at the New York Fed model on wages, are you still convinced that we get 3?
I think so. I mean, our core view is that we get 3 cuts this year starting in June, and that's sort of been our core view since late last year. It depends on which sort of wage growth measure you look at it, because, you know, ECI is suggesting a different number, that you're closer to that 3.5% that the Fed wants to see wage growth that's consistent with its 2% target. But I think, you know, as Chairman Powell noted last week, there are going to be bumps along the way, but our core view, as long as inflation remains on the path back towards 2% over the projection period, that's what's really important for the Fed. And, you know, the fact that they did revise up their core PCE number while still maintaining 3 cuts does suggest that the Fed is willing to tolerate a bit of a volatility around inflation, and the Fed wants to cut and really stick that soft landing that's within sight. I mean, the fact that you have core PCE for this year and their projection at 2.6, that's not far off from, you know, the 2.8 measurement that we got recently in our expectations for this Friday. We know that the Fed put is in play, and so that should be supportive for markets, and, you know, rates volatility is coming down, and so that does provide a floor for equities in our view.
I'm just curious what you would both say to Goldman Sachs. They have they've looked at various scenario analysis. They've talked about 6,000 as being a target that's on the table. But this goes back, Cameron, to your point about breadth. They say breadth is being weighed down by the higher for longer narrative. You're saying to me that you are seeing breadth. Where is it most prominent? And is there some kind of a rotation from growth to value, or is that too extreme a nuance?
Yeah, there's a hint of the growth to value rotation, but it's important to add the cyclical aspect to it, because where we've seen the most improvement in breadth in the recent weeks has been in the most cyclical sectors. So your industrials, your materials, your energy stocks. We think some of this is sniffing out the fact that, yes, there's some underlying inflation dynamic, mostly in those commodity sensitive areas, but there is also a recovery happening in PMIs, in manufacturing PMIs. We think this economy actually has a cyclical recovery that is at play right now. Part of that is because of fiscal spending and all the spending on manufacturing construction, but there's also this dynamic that you were in a manufacturing contraction for much of the last 15 months. So as we see that cyclical recovery, that should cause growth to be better. The most incredible thing here, though, is that the Fed has actually never cut rates in the last 40 years when PMIs were accelerating or expanding. So talk about a first time for everything. This could be the first time that the Fed is cutting rates as we're seeing an improving PMI environment.
That's the holy grail, really, isn't it, Nadia, for this market, in that the expansion in profits, the expansion in markets, and yet people have said to me, as far as AI is concerned, Europe and the rest of the world is in the foothills of electricity use and data use relative to the US.
Yes, you know, I mean, sort of our view in terms of, I agree with Cameron in terms of the cyclical recovery that's happening. This is one of the reasons why we've been favoring industrials, and we're seeing an improvement in breadth. You do have nearly 80% of the S&P 500 companies now that are above their, you know, 50-day moving average. In terms of sort of like the expectations around AI and data and electricity, the infrastructure continues to be well built out for AI. There's more to do, of course, in terms of on the utility standpoint, and you're seeing some opportunities there as well. We continue to like tech because of this. We have some selectivity within utilities. Overall, we are underweight utilities just given the fact of the defensive exposure in this sector, but we do think that there are opportunities from those that could benefit from the continued pickup in data centers and AI. I would say, just to finally send home that point, our focus in tech also has expanded beyond the U.S. We have been encouraging our clients to also look outside the United States, particularly in Asia. Asia Super 8 is a group of stocks that we are looking at in terms of exposure to AI from a semiconductor standpoint, as well as an AI application standpoint.
Okay, Cameron, thank you so much. Nadia, thank you. Both stay with me, Nadia and Cameron Dawson there. Quick snapshot of what's going on in the commodity market as well. There's a big note out from Goldman Sachs today talking about the next evolution, another 15% upside in commodities for 2024. And they specifically cite copper, aluminium, and gold, as well as oil products. They see, gold has hit a record, and copper obviously topped at 9,000. This is on COMEX. Of course, on the LME, it trades at $9,000, and their price targets are for the various areas. Copper at 10,000, aluminium 2,600, and gold at $2,300. So just keep that in the back of your mind as well. A couple of lines coming through from Austin Goolsbee. This is on Yahoo Finance and an interview there. He's saying he doesn't feel like the story has fundamentally changed at the moment, that they need to see progress in the inflation coming down, and that the main puzzle with inflation is in the housing market. So as those headlines evolve, we'll bring those to you. Let's get under the hood. What's moving ahead of the bell? We had those chips under pressure at the start of the session. Abby, what have you got?
Lots of chip pressure indeed, but we also have lots of news on the airlines. Let's start off on the shares of Boeing, because they are higher, at least the last time that I looked. And this, of course, on the news that CEO Dave Calhoun is out. The hope that the issues, investors hoping that this could bring the issues that we've had with the Boeing planes, the 737s in particular, that perhaps it will get worked out. United Airlines, though, down 3.1%, and this is a Bloomberg scoop. The FAA is considering temporary measures to curb growth, including preventing them potentially from adding new routes. This after, of course, a series of safety incidents. And then you were talking about the chips menace. There's AMD down 3.6% on this report that China is going to limit the use of foreign chips.
Okay, yeah, big news flow on those airlines over the weekend and this morning. Abby, thank you very much. Coming up, we're going to dig into the Boeing CEO stepping down.
I didn't know what happened to whoever was supposed to be in the seat next to that hole in the airplane. I got kids, I got grandkids, and so do you. This stuff matters.
That was David Calhoun, a passionate plea at one stage. He's to step down at the end of the year. The stock is up nearly 4%. We discuss on Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this this be the last of its kind? No, this is the nature of capitalism. Get over it.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
I didn't know what happened to whoever was supposed to be in the seat next to that hole in the airplane. I got kids, I got grandkids, and so do you. This stuff matters. Everything matters. Every detail matters.
That was the CEO, Dave Calhoun, back in January. Now Boeing announcing sweeping management changes, with Calhoun set to leave the company at the end of the year. Now, the airplane maker is grappling with safety crises centered around its most important product, the 737 MAX jetliner. A line from the outgoing CEO, he will be there until the end of the year. He said, "The eyes of the world are on us." This is from Calhoun himself, as he will leave at the end of the year. As you all know, Alaska Airlines Flight 1282, the accident was a watershed moment for Boeing, and we must continue to respond with humility. Let's get to our Bloomberg reporter on the story. It is Sid Phillip. Sid, good to have you with me. I mean, one could say there was an inevitability to this. Are you surprised that he's going? Are you surprised that he's staying until the end of the year?
Yeah, I mean, it has been, there's been speculation for some time now that Calhoun and Stan Deal, who leads Boeing commercial airplanes, could be sort of they could be removed from their positions because of the crisis that's ongoing at Boeing. But sort of matters came to a crescendo last week when airline CEOs sought meetings with the board without the presence of management, and that sort of set off alarm bells ringing that something was in the offing. But this is a massive move for Boeing to sort of do such a massive regulatory shakeup, and it sort of comes at a time when the company is in its biggest crisis since the MAX crashes back in 2018 and 2019.
Okay, well, it is breaking news, and the stock is rallying ahead of the open. Sid, thank you very much. Bloomberg's Sid Phillip on the airlines. My guests this morning are Cameron Dawson, Nadia Lovell on this topic. I'm drawn to one line, Cameron, that the CEO said, "We are going to fix the problems, but we must inculcate commitment to safety and quality." That is perhaps the most shocking statement of all. We must inculcate commitment and safety. One would presume it was there. An inevitability, what does it take for market analysts to believe in Boeing again?
Yeah, to your point, you would have hoped that this was there. And this really does speak to what are deep-seated cultural issues at Boeing that have been around for quite some time. It started in the Muhlenberg years with that laser focus, singular focus just on cash flow, which of course was curtailed with the two fatal 737 MAX crashes. But the replacement with Calhoun was effectively an insider. He'd been on the board for a while. He also came from GE, which shared a lot of the same cultural issues as Boeing, which is a deep chasm between the corporate oversight and manufacturing boots on the ground. So GE's issues were fixed with an outsider in Larry Culp. The question is, what kind of outsider is it possible to have that at Boeing? So we see this as a step in the right direction to change management. However, it's likely a very long and winding road to fix these cultural issues, fix safety issues at Boeing.
And Nadia, if I take it to you in a slightly broader context, you know, departure of a CEO, the wholesale overhaul of Boeing. When you look at the overall airline space, I have the consumer demand rampant in the front end of the airline, but we have fundamental safety issues in some of the biggest producers in the world. Your first take on the CEO stepping down at Boeing?
We think that, it's important that we continue to take the safety issue seriously and shore up our safety system so that, one, consumers as well as investors have confidence in our industry. We know that there's strong demand for aircrafts and the pipelines are quite robust, but we want to make sure that those aircraft that's coming out and coming to market are safe. I mean, more broadly in the airline space, this is an area that we're more neutral on. Obviously you've highlighted the pickup in consumer travel that's likely to extend into the summer season, and there's probably going to be capacity issues, and so that probably helps pricing in terms of airlines. But reality is we're also watching, of course, the pickup in energy prices because that will be a headwind from a cost standpoint.
Ladies, great first reaction to the breaking news story and your take on the market. Cameron Dawson, Nadia Lovell, my guest this morning. Coming up, your morning calls, and later we'll have SocGen's Manish Kabra with me to discuss why he thinks the U.S. economic narrative is beginning to improve. The conversation on Bloomberg this Monday morning.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Euphoria is temporarily interrupted. I mean, we've come up the best week of gains, up nearly 3% on the NASDAQ last week. It is interrupted temporarily. You've got AMD and Intel under pressure, more than under pressure, as we understand that China are going to push back against using those chips in government servers. Again, it's getting embroiled in that tit-for-tat trade war. Stocks are just drifting a little bit lower. You put on nearly 3% on the NASDAQ. Yeah, so you roll it over, have a look at the bonds, because what you've got here, we're counting down to the PCE. Yes, the core will come in, they expect, at 0.3%, so a little bit of a nip lower there. But again, we drifted lower. We took 10 basis points off the short end of the curve last week. So yields just ticking back ever so slightly. Let me get you up to speed with your morning calls. This is what you got this Monday morning. What is Wall Street writing about? Well, first up, Barclays upgrades Disney to overweight, citing a narrative reset, which likely will be followed by a positive estimate for revisions. Next up, Mizuho downgrades Tesla to neutral, analysts citing challenges like weakening demand, tightening liquidity through next year. And finally, Wells Fargo raises the price target on Citi to $80 and keeps an overweight rating on the shares. The analyst cites optimism about the bank's restructuring. Monday morning, we're going to reset your agenda again. We've got SocGen's Manish Kabra joining me on why the macro themes, they're improving. That's all around the opening bell. That is up next on Bloomberg. Good morning from New York.
names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to create index products, and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Equities kick off the week. We're going to roll over from futures to cash in just a moment. On the back foot, two very, very clear agenda issues for us this week. One is the pressure on chips coming from China in AMD, along with Intel, but also the regulatory angst as well from the European Union. That Digital Markets Act is going to get its teeth into tech, in Apple, in Meta, etc. So these are new headwinds in tech. But again, the market believes you're going to get this 3 cuts. And so we've just heard from our guest this morning talking about breadth. The Russell 2000 futures up 0.3%. There you go. You got the asset managers rejoicing over at the NYSE with Eaton Vance. This is the state of play. You got the euro up by 0.2%. Yields managed to regain 2-3 ticks. 2-3 basis points. It's hardly what you call major moves on that. As you saw last week, 2-year yields, I should say, down by 13 basis points, and the 10s were down by 10 basis points on the week. Crude is up 0.1%. The market presumes that OPEC Plus will continue with their cuts and that there's no need for a policy response at next week's meeting. So that's the state of play across your assets this morning. There is only one dominant story. It is about Boeing. The CEO, David Calhoun, announces he will step down after the fallout from the safety issues around the 737 MAX jetliner. Abigail Doolittle is with me on the story. Abby, what advances in this story have we got? Calhoun will go, but it won't be until the end of the year.
Yes, and we do have the stock popping. In fact, the best day since January on this man. As investors very encouraged by the idea that by Calhoun stepping down, that perhaps these issues, these manufacturing and supply chain issues that we've had with Boeing that have caused a number of tragedies for, in particular, the 737 line, although there was an issue not so long ago with the 777, that all these issues will get worked out and that these planes will be safer and there will be more confidence. But it's not just Boeing that's in the news this morning. And I should mention, actually, because it's very interesting in terms of airlines using Boeing planes, United is one, but we also have Ryanair. Their company, the CEO there, is welcoming the management changes in CEO, saying that they really welcome the immediate management changes, that with Stephanie Pope being appointed to lead Boeing commercial airplanes effective today. So as you mentioned, Dave Calhoun, it's going to be a little bit while, but some changes happening today. So Ryanair expressing encouragement and support for that. On the other hand, we have the shares of United Airlines, a big user of some of those Boeing 737 planes, one of the biggest users. Those shares are down, and this, of course, has to do with the Bloomberg scoop saying that the FAA is considering that they may, in fact, put in place measures that could slow growth, such as limiting operations on newly delivered jets and also not allowing new routes to go into play. This is important, Manus, given that the all-important summer season is ahead. So lots of news on the airlines today.
Okay, Abby, thank you very much. Let's turn our attention to the chip makers I mentioned to you throughout the show. You got the Financial Times reporting this, that China is limiting the use of US chips in the servers on government computers. Ed is with me. Ed Ludlow is ever tracking the tech story. How significant is this, Ed, if there is a pushback from the Chinese government?
Well, significant in the sense that more than 25% of Intel's revenue overall comes from Greater China. What the FT is reporting is that the new guidelines from the Finance Ministry and the Ministry of Industry and Information Technology would require over time government entities to source both servers and other hardware where the microprocessors or chips are made by domestic manufacturers. Problem being that at the cutting edge of server GPUs and CPUs, those are mostly US players. Part of the FT's report also includes some software names, for example, Microsoft, which seems to be, there seems to be a lower level of impact. But you look at the names involved, Intel and AMD, Intel down more significantly, almost 4%, AMD down 2.7%. I think you heard you say this earlier, Manus, but it is a sort of tit for tat. You know, the domain of server designs in the context of the chips that goes into them has become an economic hostility between the two nations. And you'll remember that last week Bloomberg reported that the United States is looking at Huawei in particular and some of the affiliate companies of Huawei in how they might be circumventing restrictions to get access to chip-making equipment and chips that go into Huawei hardware. So it's a story that's moving at a daily and weekly pace, and it's not a huge surprise that the Chinese government's doing this in the context that they've already done it with bans on foreign laptops and smartphone handsets in the government entity use case.
Yep, and certainly just looking at the breakdown, I mean, you're looking at 14.7 billion in terms of revenue coming from China, which again is just ahead of the United States on the gross level. Ed, thank you very much. Ed Ludlow there tracking this story on tech. Let's dig a little bit deeper because you've got Apple, Google, and Meta. They're also facing investigations. Now, this time it's from the EU, and it's about their compliance with new laws. Alex Webb is with me. This is Europe gnashing its teeth, not just showing its teeth, but some force. Context for me, Alex. What is the new act, and what are they pressing down on?
Well, this all pertains to the Digital Markets Act, which was passed in November 22, came into effect in May 2023, but crucially, the companies had to be following its dictums by March the 7th. And so now, very soon after that, as you say, the the EU is showing its teeth. This is about what it deems as gatekeepers. These are companies that match a certain number of thresholds, for example, having a market cap of more than $75 billion, having a certain number of users in the European Union. And it won't surprise you to learn that these are mostly Silicon Valley giant, or at least West Coast tech giants, Apple, Amazon, Microsoft, Google, Facebook, as well as, of course, TikTok. It's about trying to ensure that they don't have outsized power, and in this particular case, it's really targeting, certainly in the case of Apple and Google, what is called self-preferencing. This is where you have one service and you sort of force or encourage a customer to use another adjacent service. So in the case of Apple, it's quite hard to delete Safari from your iPhone. That is therefore perhaps considered self-preferencing. That is something the European Union is going to investigate. Needless to say, Apple denies that that's the case. Similar with Google, whether it serves its own search results, its own services in search results. And with Facebook, it's to do whether it serves data, it shares data between, say, Facebook and Instagram. So lots of different things, but quite precise for each of those companies.
Yep, and certainly it's going to be interesting to see then any more developments between Google, Alphabet, and Apple in terms of the AI story. Alex, thank you very much. Let's turn our attention to entertainment space. Disney's getting an upgrade from Barclays into overweight, saying that the narrative reset should be followed by positive estimate revisions. Katie Greifeld has the revision narrative. What have we got, Katie?
Well, that vote of confidence from Barclays definitely supporting Disney shares this morning, currently up about 2.5%. To get specific here, Barclays upgraded Disney to overweight from equal weight. And like you said, the analysts there saying that Disney, it's undergone a, quote, narrative reset since its fourth quarter results. That should be followed by positive earnings estimate revisions. The analyst also says that, of course, better than expected 2024 guidance and what they call an incessant flow of Disney-related news ahead of its proxy vote. That should be a near-term positive for this stock. Additionally, investors have, quote, gained more confidence about earnings that these estimates have actually bottomed. Of course, Disney reported in February. The stock is up about 17% since then. And we heard from Bob Iger this month saying that he's extremely confident that the company will meet its goal of profitability in its streaming TV businesses in the fourth quarter. Now, the next thing to watch here, Manis, is the Disney's annual meeting. That, of course, happening in early April. And Disney, right now, it's embroiled in a proxy battle with Nelson Peltz. It will be fascinating to see the results of that vote.
Okay, Katie, thank you very much. Katie Greifeld tracking the Disney story. SocGen's Manish Kabra joins me now, weighing in on the markets. His view: U.S. exceptionalism is going from strength to strength. The macro themes continue to improve in the U.S. with the AI boom prompted our bullish view in June 2023, and now improving credit conditions and lending standards. Manish, good to see you this morning. You present a thoroughly rational proposition for continued, I would say, pretty strong bullishness.
Yes. I think it's fair. As in, we started upgrading S&P, view in second quarter, on back of Nasdaq, way before markets started to coin this term Magnificent Seven. To be honest, we upgraded U.S. industrials back in November 22. So it's been a while on back of expectations there would be a strong fiscal response in the U.S. last year. Now today or last week, when we upgraded S&P target again, as in the whole holistic reason is literally we got the reshoring boom taking place. We got the AI excitement, Nasdaq earnings booming at this point. And then we have, very surprising, as in lending standards are getting way less negative. Credit spreads are saying, we are past the peak of the default cycle. When you combine those things together, we upgraded financials. And we upgraded financials for the first time since December of 21. So it's taken a lot of thinking, a lot of courage, of going beyond than what we have been seeing for the last 2 years.
And that courage is emboldened in financials. And this is quite a call because you upgrade your financials call for the first time since December 2021. You're upgrading U.S. financials. Now, do you dissect that? I mean, we're showing Citi, Wells, Bank of America, and of course there is the godfather in the room. It'll come soon, JP Morgan. Where do you upgrade the most in financials?
As in our preference is to go for cyclical growth, as in that's really the big focus. Cyclical growth is the part of the market that we like. Within that, of course, both banks and insurance are attractive. They come, they take a lot of our boxes that we want everyone to position for, in second quarter and rest of the year. So that's, both banks and insurance, are the big focus.
You also say the consumer is in boom phase. What is it that reassures you of that when I have others warning me? I mean, savings rate are not imploding as quickly as they have been. So why is it that you say we're in a boom phase?
Good point. Main reason is the housing data, house price data that we are watching. It's, it troughed in Q3 of last year. It's growing at +6%. At this point, U.S. consumer confidence again,
So does that deliver a wealth effect? Is that it?
Exactly. There's a very strong wealth effect, based on house prices, based on market prices. And then, you combine all of this together with the, the main thing is what leads uncertainty in the market, uncertainty in the jobs market is when profit margins start slowing down. At the moment, what we are seeing is, S&P, of course, it's, very strong balance sheet, companies doing really well. But even if you go economy-wide companies and you try to see where profit margins are, they're still way above average levels. So I think if profit margins don't wobble, we don't see employment shock, and all of that starts feeding into the, expectations that we have that consumer will keep doing, keep surprising in the U.S. on the upside.
in the target that you have, 5,500 for the S&P 500, and you obviously talk about the profitability within the NASDAQ 100 stocks, which is surged by 25% in profits. You strip out the NASDAQ components of the S&P 500, and you have a much different profitability story. When you look, and again, I asked you the same question as I asked the last cohort, which is AI. We understand the growth trajectory here in the United States of America measured by energy consumption, measured by the number of stocks. Where are we in the evolution of AI and those chip usage in Europe relative to the United States of America? Is that the next evolution of that chip story?
As in every corporate is, whether it's corporate, whether it's sovereign, as in everyone is trying to work out how to use this, the data centers, how to use the artificial, the idea of generative AI, how to start using that and start creating, productivity boost, at this point. So I would say, as in my take on AI is, yes, it started in the US. There are a lot of companies who are going to use it. We try to dissect that by who's going to use it, which country, which part of within the organization, who's really going to take benefit of that. And it's a very global phenomena. So as in it's again, Europe came up with the first, Artificial Intelligence Act. And whenever you have regulation coming into play, I would say that theme is maturing, it's getting accepted. And widely, getting recognized. So it is getting recognized around the world at this point.
Yeah, I mean, it's certainly a headwind this morning, isn't it, in terms of not just the tit-for-tat trade war, which is kicking in on Intel and AMD, but also the Europeans are setting their stall out in terms of they're going to take some big tech to task. Manish, thank you very much. Manish Kabra, Societe Generale, my guest this morning on the markets. Coming up, the EU investigates those very big US tech titans.
These are serious cases. We've been able to solve that with merely a discussion. It would have been resolved by now.
We take a look at the probe on Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
The linear business is not going anywhere. The sports business is moving and is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have two assets in the sports business that are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
They're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
These are serious cases. We've been able to solve that with merely a discussion. It would have been resolved by now. So we open for good reasons, because we find that if this, in inverted commas, compliance solutions, if they persist, then consumers will not have the choice that they were promised by the Digital Markets Act.
Tech is under pressure this morning in the United States. Apple, Alphabet, and Meta potentially facing hefty fines as the EU investigates their compliance with laws aimed at reining in the power of big tech. Meanwhile, you've got the Financial Times reporting that China is limiting the use of US-made chips and in the servers for government computers. We've got team coverage on these stories. They are moving markets. Mandeep Singh, Ed Ludlow, join me now. Mandeep, let me go to you first of all. We've been talking about this issue in terms of regulation. It really is a mounting headwind, isn't it, from the Europeans?
Yeah, and look, they rolled out Digital Markets Act. Now they are looking into which companies are actually complying with it and who are not. And I think in this case, the challenge for an Alphabet or an Apple is because they own the operating system, the EU is going to look at them as gatekeepers of the internet. They have an app store where they charge their own commissions, and they want these companies to open up the app store for third-party payment systems, et cetera. So a lot of changes in terms of how these companies are supposed to open up the platforms. But in the end, it comes down to giving users more option. I mean, if you have to pay Meta not to track the user and subscribe to their services, how likely is that going to happen? But that's what I think we are looking at in terms of the changes these companies are about to roll out.
In terms of the fines, Ed, I will come to you in a moment just on the chips, but Mandeep, just finish off briefly for me in terms of the potential litigious fines, the scale of the fines. How much of a headwind is that? Is it a real headwind or a minnow?
I mean, what we have seen historically is if these companies are found not in compliance, they may have to pay up to 10% of their revenue in the region. So in the case of Alphabet, 30% of their total revenue comes from EU. So potentially we are talking about 10% of that 30%, so almost 3% of their revenue as potential fines. But I find it hard to imagine, these companies are totally not in compliance. They have been making changes to give user more consents. They've been opening up the platform to change the default. So they're already making the changes. Okay. I find it unlikely you will see hefty fines here.
Okay, Mandeep, thank you. Ed, good morning. Good to see you again. So when we grapple what's going on with the likes of AMD and with Intel, you look at this through the prism of what the US, the Biden administration, the Trump administration has been trying to do to restrict technology going into China. But yet on the other side of the trade, you would point out that this tit for tat is about the Chinese and their import restrictions.
Yeah, that is the policy balance, right? The United States is trying to curb export of proprietary technology into China, and China's response is to say, well, okay, then, if you are a government entity or a state-backed company, then we are going to limit your ability to import certain technology anyway. How this manifests itself from the point of view of the companies is really interesting. Overall, Intel gets 25% of its revenue from China. What we're talking about, according to the FT report, is the chips that go into government-use servers that power compute, or the servers themselves. The server designs are made up of GPUs, CPUs, networking gear, Ethernet, etc. And the guidelines from the Finance and the Industry and Information Technology Ministry basically say, from this point on, as you're buying computing equipment in the server context, we want you to use domestic players. The problem the Chinese have got is they don't have Chinese domestic players at the cutting edge of semiconductor manufacturing. And so if this is about AI or it's about the sort of edge case of compute, they're still kind of beholden to those US companies for the time being.
Okay, Ed, we'll see where this goes to. Ed Ludlow, tracking the chip story. Thank you very much. Some sector price action this Monday morning as we start into a shortened week of risk-taking and counting down to the PC. Abby, side by side with me.
And right now we do have a small decline for the S&P 500, but nonetheless more sectors are higher than not, led by energy up 1.1%, despite the fact that we do, I should say in sympathy with oil being higher, Brent crude by up 1.2%, WTI up just a little bit more. Real estate, materials, healthcare, utilities, consumer staple, and discretionary higher. A lot of defensive sectors in there, so in some ways there's a little bit of a risk-off tone. To the downside, tech and communication services, both down more than 0.6%. Let's look at some of the subsectors that are really under pressure today, and not surprisingly, with all the talk about chips and the possible limitation on China. We do have the stocks down more than 1%, and the airlines down. Actually, the stocks off of its lows, down 0.6% at this point. The S&P 500 airline index down 1.2%, being weighed on largely by United Airlines, and of course that Bloomberg scoop that the FAA may in fact require them to limit growth in particular ways.
Yeah, we're certainly going to look at, you know, supply and into the airline system this summer. It's going to be tight. Abigail, thank you very much. Abigail Doolittle on your sectors coming up in the show. I'll run you through your agenda for the week. The Trading Diary, it's on the way.
Was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios, and you know, any given day it would be the head of a studio, and you know, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
This is Bloomberg.
Let's get you your trading diary for this week. Today, it is the deadline for Donald Trump's $454 million bond. The Milken Investor Conference kicks off tomorrow. We also have U.S. mortgage applications coming through on Wednesday. Thursday, Sam Bankman-Fried is scheduled for a sentencing in New York. And finally, we close on it the week with the PCE data. And the Fed Chair Jay Powell speaking in San Francisco. Markets will be closed for the Good Friday holiday. The only thing you could trade that day is Bitcoin. That was Countdown to the Open right here on Bloomberg, setting the agenda for you this Monday morning. Good morning from New York.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Also streaming on YouTube, so head over to youtube.com and search Bloomberg Podcast. That's where you'll find us. We're also in your dashboard, so check us out there with Bloomberg CarPlay. Bloomberg Intelligence, we lean heavily on the 400 professionals in Bloomberg Intelligence. That's Bloomberg's in-house research department. They cover more than 2,000 companies, 130 industries. We're going to lean on them for the next couple hours. A lot to talk about. Boeing, big changes in the leadership at Boeing. We're going to get the latest on that. And we also want to get another issue on the tech front. European regulators once again coming after some of these big tech companies. Think Apple, think Google, think Facebook as well. So we're going to break that down. But first, let's go to Lisa Mateo, who's still here for a Bloomberg Business Flash. Lisa, what do you got for us?
Good morning. Well, stocks are lower, and this is after an overall good week for Wall Street. Right now, we have the Nasdaq down about 0.3%, the Dow, S&P down about 0.2%. The two-year yield at 4.62%, that's up about 3 basis points. The 10-year yield at 4.24%, that's up about 4 basis points. To commodities, oil on the rise, snapping that 3-day slide following attacks in Russia. Right now, we have NYMEX crude $81 a barrel, Brent crude $86 a barrel. And over to gold. Spot gold is higher at $2,178 an ounce. We have a big week for economic data. We're just getting in new home sales for February, came in lower than expected. And then tomorrow we have a report on consumer confidence. Good Friday when the markets are closed. We have income and spending data as well as PCE inflation figures. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate it. Market Drivers today is brought to you by Interactive Brokers Bond Marketplace. Access their vast selection of over 1 million global fixed income securities with no markups or built-in spreads and low transparent commissions. Learn more at ibkr.com/bonds. Alex, what do you make of that Boeing news today?
Man, when the headline crossed, and I was like, oh,
Yep.
here we go.
Yep.
Clearly a big revamp. It's so interesting that he's doing it when we don't have a successor yet. Like, I appreciate
Yes.
he'll be there for a while, but no successor, which means it seemed more urgent that they had to announce something.
It felt like it was tied to that news last week that some of the boards of directors are going to go do a listening tour of some of their bigger airline clients, but without the CEO. So
That's never good.
I guess you can put
sign.
yeah. So we're going to break that down going forward. Right now, let's check in with Nora Melinda. She covers all the equity markets for Bloomberg News. Nora, what are you seeing going on out there in the stock market?
Well, we can't stop talking about that big news of the day. We do know that the CEO, Dave Calhoun of Boeing, announced that he's stepping down after all of the fallout that we've really been seeing with the 737 MAX jetliner. It's caused a number of issues and tragedies, but as you both said, this is not going to happen until the end of the year. But the CEO of Ryanair is coming in saying that he's welcoming the management changes, calling them, quote, much needed. And
ouch, that hurts. Yeah.
Yeah, and so there's really some immediate changes happening, especially today. We have the current COO, Stephanie Pope, is going to be named commercial airline CEO. And so we do see those Boeing shares popping as much as 3.9% today. They're pairing a bit now, but everyone's happy. Well, that seems to be the case, unfortunately.
But United, though, flip side, that stock down 6%, and that is sort of due to all the mishaps they've had recently, right?
100%. I mean, that's really been in focus as we think about these airlines. Basically, this is a Bloomberg exclusive, actually. The FAA may put measures in place that could slow growth that include preventing the carrier from adding new routes. And so, of course, we know this comes after a series of different safety incidents, but United could potentially be barred from customers on its newly delivered aircraft. And this is super important as we're heading into this summer season. That's not what you want to hear.
No, especially since I am captured in Newark, New Jersey, which means I am on United.
You have to.
But I am happy to fly United. I've been flying it forever. They're fine. The Boeing planes, they're fine. Let's just get going here. So, but anyway, if you're Boeing, this is a big issue. And I guess the question I have for a lot of folks, and we'll talk to Guy Johnson in just a moment, George Ferguson a little bit, is, okay, management changes, but this just feels like fixing the problems. Let's just call the problem being quality control. It sounds like a long turnaround, like turning a battleship around. It doesn't feel like
definitely not going to be instant.
Fix. Well, that's why I'm really curious as to what their short list is going to look like, because then you also have to figure out Spirit Aerosystems. If you're going to integrate that, what does that look like? So you have quality issues, you have absorbing the merger, you also are really behind when it comes to Airbus, even before the issues. So there's who do you have for that, right? Like Melancom from Qualcomm is going to be on the board now, right?
Yep.
So, okay, do you go from someone in the tech industry? I don't know.
Yeah, I guess in the past, we were talking to George Ferguson. He says, where not to go is in automobile industry. That's been tried in the past, and making planes and making autos is a whole different thing.
Things.
So it kind of goes to the question of just engineering chops. Anything else you got for us?
Let's quickly look at Intel. I mean, we see that those shares falling to the lowest since November, falling as much as 4.3%, and we have AMD at its lowest in a month. And this is coming after the FT reported that China has adopted new guidance to limit the use of U.S.-made microprocessors and servers in government computers. So these new rules could mean that chips made by the companies will gradually be replaced by local alternatives.
I feel like this was a big deal, like when I read it over the weekend. I mean, in some ways it was no surprise, but still very much a big deal. And like, when can they make the switch? And in terms of, say, Microsoft systems, how easy is it, right, to do that? I don't know the answer to that.
I know, and it just feels like just another kind of salvo in this technology Cold War, if you will, that seems to be, gaining momentum, or at least maintaining some momentum, which, of course, in my mind, brings it right back to Apple, because I can't think of a company, certainly on the technology side, that is more exposed to China, both in terms of its own supply chain, plus as an end market, approximately 20% of its revenue comes out of China. That has got to be a big issue there. So the technology Cold War is a real thing.
Yeah, and for Intel, apparently, it's 27% of its revenue in sales, I should say, came from China, and for AMD, about 15%. I was reading through some of those numbers, I think it was in the FT, over the weekend. Now, Microsoft doesn't break out China sales, but Brad Smith, the president, told U.S. Congress last year that the country provided 1.5% of revenue. So not as much for them, but nonetheless, I mean, and you have to wonder how it goes. Like, then you get retaliation, et cetera. So I'm into that. And then you add on the EU coming after big tech, and it's really like there's a tech attack for sure.
Yeah.
It just depends on what country you're looking at, I guess. And you're taking a look overall. I'm just checking in on the NASDAQ here. The NASDAQ is down by 0.3%, so definitely off the lows. But it was interesting. Deutsche Bank had a note out over the weekend, Paul, that said that they don't feel that risk appetite has been really involved in leading the recent rally, but it's been underlying fundamentals and actual growth that has. So if you get frothiness to come back in, you could go even higher. So I thought that was interesting if you separate the two. But can that frothiness happen without tech?
Yeah, exactly. I mean, tech has been the leader for this market for the longest time, although and even led us down in 2022. But it's been the leader, and I can't envision a market where tech isn't the driving force. I don't know. I mean, is it is it?
Well, we've seen industrials, we've seen materials, we've seen energy in the last month do really well.
Yeah. Yep. Okay. Nora, good stuff. Thank you so much. Nora Melinda, we appreciate that. Nora covers all of the markets for us here. And, we're going to talk to George Ferguson about this Boeing news. He's a Bloomberg Intelligence, follows all the aerospace companies. But there are some fundamental issues. But the timing that you brought up, I think, is very interesting. You kind of announced the gentleman, the CEO, Mr. Calhoun, is stepping down, yet you don't have anybody in the wings suggesting that it was, in fact, pretty abrupt here. George did make the point that he was surprised that that Mr. Calhoun's going to stay around to the end of 2024, also suggesting that maybe they don't have anybody, they don't have a short list ready.
But you have to wonder, too, how much of it was due to the commercial airline replacement, too, right? Wasn't Stephanie Pope that came in and she's going to replace? I wonder if they needed to just get that going fairly quickly also.
Yep, absolutely. All right, a story that is out there for the technology companies. It seems like we've seen this play before. The European regulators, they're not too happy. They take a much heavier hand in terms of a regulatory oversight
to love them
some of the big U.S. technology companies. I'm thinking Apple, I'm thinking Google, I'm thinking Meta, and that's back in the news here today. Mandeep Singh joins us, senior tech analyst for Bloomberg Intelligence, joining us here in our Bloomberg Interactive Broker studio. So, Mandeep, those of us of a certain vintage like myself, I can remember back to the late 80s, early 90s when it was Microsoft that really was under the regulatory microscope of the European regulators. And the net result, it seems, if I think back, was just a lot of checks being written, a lot of fines being paid, but nothing more than that to the overall business model of Microsoft, i.e. there's still that Office bundle and so on and so forth. Talk to us about what's going on from Europe today as European regulators look at some of these big U.S. technology companies.
Yeah, and just to start off with that Microsoft comparison, I think one thing that did happen was a change in behavior. So you could expect something similar with these companies, even though it's unlikely they're going to be broken up because of this, but you can expect a change in behavior in terms of how they operate. And the reason I say that is Microsoft was an operating system company.
Yep.
They were layering on their Internet Explorer browser. What the regulation intended to do was to decouple the two in terms of giving more choices to the users. You're seeing EU kind of pretty much play to that point where these companies, Apple and Google, they have the operating system, they have the App Store, they bundle a lot of their own apps. Right? So you have to use their App Store, give them a 30% commission, you have to use Safari browser, you have to use Google Maps. So that's what I think regulators are focused on. I think they're probably 5-10 years too late. I mean, look at, all these... the reason why they're so big is because they operated like this for the last 10 years.
But this is such a great point because, I don't want any of that to change because it'll make it more annoying for me to do stuff on my phone. So, to your point of it being too late, in the beginning when I was adopting the iPhone, maybe, but now that's just a pain.
Yeah.
Is this going to hurt them to make this case?
I mean, regulation is always an afterthought. We have seen that time and again. It comes in too late. And look, in this case, they are vouching for more open app stores. So instead of Apple taking a 30% cut and forcing everybody to use their payments platform, it's about having third-party platforms. Now, the one caveat there is, if you bring in third-party platforms, guess what? Google can launch their own app store on iOS. Right now, Google App Store is used in Android. If you start opening up the platform, who does it benefit the most? I would argue Google, because then they can put their App Store on iOS. You can pay through the Google Android App Store on iOS. So I think, in effect, even though the regulation is well-intended, it may actually end up, favoring Google if it turns out to the way I think it is, because the likes of Spotify, Netflix, they're not going to create a new app store. It's peanuts when it comes to saving on payments costs. Like, what are you getting out of investing so much in developing your own app store? Yes, it's good to have an open platform. That's what Epic has been arguing, and all the gaming companies. But I think the one company it benefits the most here is Google.
That's actually pretty funny.
All right, so just real 30 seconds. How are investors thinking about this risk, the regulatory risk for these big tech companies? How are they thinking about it?
I mean, it's different from different companies. I think the operating system gatekeeper analogy applies to Apple and Google specifically. For Meta, they want you to pay to subscribe to the apps if you don't want to be tracked. Now, that's interesting, right? We are so accustomed to using social media apps as free because our data is what they use for targeting. If you don't want to be tracked, you have to pay Meta, and I think that's not going to be palatable for users.
So I love Mandeep cuts through it, right?
Yeah,
like
right.
now I get it. All right, Mandeep, thanks a lot. Really appreciate it, Mandeep Singh, joining us from Bloomberg Intelligence. Let's get back to that Boeing news. That stock up over 1%. The CEO stepping down in an overhaul of upper management, as well as some people on the board. There's only really one person at Bloomberg to go to if it's not Brooke Sutherland, and that's Guy Johnson. He covers the airline industry for Bloomberg and Bloomberg TV and radio, and he joins us now from London. Guy, I remember, I don't know, a year ago, was it, when you went up to Boeing headquarters in Seattle? You spent a lot of time with Dave Calhoun, really getting deep into how they manage their business and their growth plans, etc. What was your reaction to the news today?
Not a lot of surprise, Alex. This has been a crisis that has been building and building and building. Remember, it was 5 years ago that we had those twin crashes that killed so many people. Since then, the MAX has never really been on track. Now, Dave Calhoun was not running the business at that point, but he was on the board. And the crisis just has never really gone away. And we had the blowout window this morning, not this morning, we had the blowout window earlier on this year, January the 5th. That's just the latest problem that this company has been facing. It clearly has a safety culture issue. It was something that was getting more and more problematic for customers, Ryanair, United, these kinds of customers, big customers, and as a result of which the pressure simply became too great. And it was also coming from regulators, and it was also coming from politicians. But here we are with Boeing. You've got Dave Calhoun stepping down, but not going to the end of the year, and he's going to have a say potentially in replacing his successor. They've got a lame duck CEO at a time when they need leadership right now, and I'm wondering whether Dave Calhoun, what role he is going to be ultimately playing. Stan Deal has gone already, but they're replacing him with an insider, Stephanie Pope, who ultimately could end up running this company. I don't know, but at the moment, Boeing is nowhere good still.
Guy, from what I've read over the last several years about Boeing here, and it seems like at some period in the past 10, 15, 20 years ago, there's a subtle but noticeable shift in focus on engineering to maybe greater focus on profitability. And if that's in fact the case, it doesn't sound like a fix is any even short or intermediate term. How do you think about the timing?
So in some ways, they are trying to address this issue. So remember that there are talks now underway with Spirit, which was part of that process to focus on the financials rather than the engineering. Boeing effectively became a sales company. It became a final assembly company. It tried to spin out lots of different parts of the business further down the supply chain. Spirit was a big chunk of that. That did clearly not work. So they're now trying to fix that problem and refocus on engineering. But it's going to take a long time for that culture to change, and it's interesting that the machinists are now asking for a seat on the board. They feel that they need to have a say on this story going forward, and whether or not you can now replace any of these senior people with internal candidates, I think, is a really big question, which raises the question of who could replace them.
Yes, yeah, exactly what the short list winds up looking like, because you're absolutely right. If you go internal, and Stephanie Pope is a COO, and now she'll run the commercial airlines unit, what signal does that have? But if you go outside, like, who is that person?
So there's a few names floating around, Alex. One of them is Pat Shanahan, who is currently running Spirit, but he's ex-Boeing. So that's a little bit problematic in itself. But Dave Calhoun apparently did mention him this morning. So maybe he's potentially one candidate. The candidate that everybody's talking about this morning is Larry Culp over at GE.
Oh,
but here's the problem. Here's the problem with Larry. He doesn't want the job, apparently. And here's the reason why. He's just come out of a crisis at GE. He's just put GE basically kind of back on its feet. Does he really want to deal with another crisis? GE is also in a completely different place to Boeing right now. It's in a good place, and in some ways, it is a bigger, better company than Boeing is right now. So why would he want to swap one for the other? Why would you want to take on a job where you've got a problem with your customers, you've got a problem with your staff, you've got a problem with the regulators, you've got problems pretty much all the way across the board?
Right.
Interesting. Thanks, Guy.
That's great.
No help for the weary, this guy. He was on late with me on Friday. He's a hard worker. GE stock is flat, considering that. I mean, we're definitely watching that. That's an interesting throw-out name. I hadn't thought about that. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red on the screen. To kick off this new trading week, right now we have the NASDAQ. Well, that's little change. The Dow is down about 0.2%. The S&P 500 down about 0.1% right now. Looking a bit deeper of the 11 major industry groups, the biggest drag coming from communication services. Then most of that from media and entertainment. Then you go a little further in the hood, we see interactive media and services with Alphabet, Meta at the top. A lot has to do with word that they, along with Apple, could face those hefty fines because the EU is looking into their compliance with strict new laws. So I want to check in with Apple. Shares are down about 1%. Same for Alphabet, and Meta is down about 0.5% right now. Over to the bond market, the 2-year yield at 4.63%. That's up about 3 basis points, and the 10-year yield at 4.24%, and that's up about 4 basis points. That is your Bloomberg Business Flash. Paul and Alex.
All right, thank you so much, Lisa, Mateo. We appreciate that. So it is, a couple more days until we finally end this quarter. Last week was a great week for the S&P, despite closing a little softer on Friday. S&P posting its best week of the year. Plus, last week saw the most amount of S&P 52...
The way I think about culture is they call organizations superorganisms. It's a collection of people, but the collection is greater than the individuals combined. So 1 + 1 is not 2, ideally it's 3 and greater. So if you were to look at a single person, a person has a set of core values, they may have dreams and aspirations. If you kind of map that to an organization, you can also think of the culture as your core values, personal core values turn into corporate core values, your organization's strengths and weaknesses. All those things collectively combined is something that we kind of put a label on it called a culture. A culture is like a muscle memory. It's very hard to change a habit. It's very hard to just say, hey, today we're going to define our culture as XYZ. We're just going to change this way. Like, it doesn't work like that. It's a collection of people's habits. That's like, again, like a superorganism. So you have to like really nudge and create an iterative feedback loop. It's a slowly evolving thing. So that's why it's so critical. Like your day-to-day decision-making, day-to-day operation, everyday execution is really dictated by the culture of your organization, not by a couple of like checklists. It's not what you write on the wall. It's what you do and live and breathe every day. And that is the culture.
Do you do that, or how do you think about valuation?
Well, the biggest question that we get from our clients is, when is the good time to take the profits off the table? When is the good time, to really realize some of these earnings? And it's a really difficult question to answer because we can never effectively call either the top or the bottom of the market. But we know that there are certain prices, that are higher than we've expected them to be in certain areas of the market because of AI, because, some technologies, some companies that are, looking to increase their profitability through this investments in AI, but this is not the time to be enamored with growth. This is the time to take the total picture into account and not give up on value just because this bullish outlook in the market.
What does value mean to you? I feel like this is like a deep question, but what is value to you right now?
Alex, for many, many years, one of the staples of diversified portfolios have been this blue chip dividend paying stocks. And this is the sector in the market that has not performed quite as well as this exciting growth names. But, the areas like consumer staples, healthcare, financials, materials, industrials, in the long run, when we think of AI story as a whole, all of these sectors stand to benefit. And the value of having these blue chip dividend paying stocks in the portfolio, plays a huge role in risk management. The other side of it, this is, beyond your questions about the value, but also small and mid cap, stocks and the role they play, in this total portfolio construction. So there are a lot of areas in the market that did not have this huge run up. So this will be a good time to take maybe a little bit of a profit and move into some of the areas that are positioned for growth.
Looking for maybe different sectors that might be opportunistic. One of them is energy. I just look at WTI crude oil up another 1.7% today. We're just about $82 a barrel in WTI crude oil. How do you think about the energy space here? Again, I think there's a little bit of concern about where are we in this transition to green energy? Is it slowing down? How do we think about that?
we're enthusiastic about the green energy and sustainable energy, but, we're not quite there yet. And yet the broader energy sector is under pressure because of the overall geopolitical environment. With that said, the demand for energy is very strong. So we like energy as the sector that plays a role in the portfolio. Energy companies, pay excellent dividends. And because of the strong demand and increasing demand in the world, and the fact that we're not quite ready to switch into the green energy sources quite yet, we hope this happens soon, but for now, we love having energy exposure in our portfolios.
So to that point, Paul, for the quarter to date, we have communication services and tech. Okay, they're the top performers in the S&P, right? That's an Amazon big tech story, but energy is up over 11%. Yeah. Financials up 10%, industrials up 10%, materials up 6%. I mean, and if you just look at the last month, it's really been those guys, the financials and energy and industrials, that have really been outperforming. Do you think, Katerina, that the movement into those kind of names will help offset any weakness in tech?
Well, of course, Alex, and this is not to say that we should give up on tech.
Sure. But the rotation will be enough to support the headline level.
Absolutely. It is really the story, the real story, in my opinion, is really the fact that all these innovations in tech are going to have across the other industries. And the fact that when we look at the previous year, the underperformance in these sectors, the valuations that look attractive, the competitive positioning, the fact that these companies have been very smart with their costs, they're running, the good models, and their prices are looking attractive, especially when we think about the environment where we're expecting few rate cuts, and it will be easier for these companies to broaden their profit margin in the environment where rates are a little bit lower than where they are today.
And Katerina, last week was a week of for much of us to hear from the central bankers around the world, and I guess the tone coming out of not only the Fed but some other central banks is probably a little bit more dovish than maybe people had thought going into last week. What's your take about how the Fed is going to kind of behave over the coming months?
Well, it's hard to know what they're going to do. And even if we look at the projection of expectations this year alone, we started in January expecting 4 to 5 rate cuts. And right now there are opinions out there that there will not be rate cuts at all. At Morgan Stanley, we still expect that we're going to have 3 rate cuts, and that Fed is, at this point is positioned to do just that. But what we tell our clients is that they should not necessarily, adjust or make drastic changes in their portfolios based on the Fed action. In the going forward, of course, any type of rate cuts we get is going to be the economic stimulus. It's something that is going to benefit the economy in the long run. But in the short run, it is really more earnings, labor market, overall, strength of the economy that is proving to be much more resilient than we thought.
And then to that point, I wonder then if the way to express rate cuts, whether it's 3, 2, or 1, because I think it was Bostic was really talking about maybe 1 cut. You also have Lisa Cook speaking right now. She says disinflation has been bumpy and uneven, and cutting too late could wind up hurting, and cutting too soon could also hurt on the growth and then the inflation front. So if you're trying to game that out, how do you express that?
Well, I think that one clear action right now is to take advantage of the higher yields in fixed income while they're still available, because, it seems like we've had money market rates at 5% forever, but it really only has been a short time frame while this has been available. And Fed is going to react based on economic data. I think that we can expect some type of rate cuts, and there is that also immediate reaction. Historically, large cap stocks react very positively. There's almost this delayed reaction in small and mid caps. So if we look at the effect of the rate cuts, whether we get 3 this year, whether we get less, whether they're pushed into 2025, but Fed is going to react to economic data, and we're paying attention to the same numbers.
All right, Katerina, thanks so much for joining us. Really appreciate it, as always. Katerina Simonetti, she's the Senior Vice President, Private Wealth Advisor at Morgan Stanley Private Wealth Management, joining us from the town of Brotherly Love, Philadelphia, via Zoom here. So, and Alex, I'm looking at WTI crude oil at $82 a barrel. I'm at least surprised it's this high. Does it reflect a perception in the marketplace that demand maybe is a little bit stronger?
I mean, yes, it would. Yes. So if you talk to all the oil guys I spoke to last week, it was like demand's actually fine. Like we're good. But there's also been increased pressure on Russian sanctions. So there was an article out that said that India may stop buying Russian oil off of certain tankers because of the crackdown. So that could wind up being an issue. And then you're sort of taking some supply out of the market. Of course, the issues with the Red Sea are still there. So it's kind of both. It's a little bit of supply and a little bit of demand as well, I would argue, personally.
And we're seeing it at the pump. My daily national average gasoline price, regular unleaded, $3.53. That's up about 15% off of that kind of December, early 2024 lows here. So, still well below where we were back in the peak, but it's creeping back up. So you think about inflation, that's one of the places where people see it.
Yep, and again, I know that they don't look at oil and food, but come on now, you can look at that chart of cocoa prices. Forget it. It does affect expectations. Then you have, OPEC Plus is keeping oil off the market. You have Iran gonna sort of meet their limitations. They're going to make up for it, which means that they pumped too much before and they're going to reduce it. So there's, it's definitely both. But I agree. Look at those inflation expectations.
All right, WTI crude, $82 a barrel. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Alex, and Lisa. Donald Trump is in a New York court as his hush money case is set for a crucial hearing today. A judge will weigh in on when or even whether the former president will go to trial after a postponement due to last-minute documents. It comes as New York Attorney General Letitia James has said the state could begin seizing Donald Trump's assets as soon as today if he fails to secure around a $460 million bond. The huge penalty comes after a judge found Trump overvalued his real estate and exaggerated his net worth. Trump has vowed to appeal. NYU law professor and co-author of the Trump indictments, Melissa Murray.
He may get some relief, but again, it's an almost $500 million judgment. I mean, it's going to be quite significant, even if it is reduced somewhat.
And Trump, in a fundraising email, wrote, "Trump Tower is mine. You will never seize my property." Sunday was a day of mourning across Russia after Friday's concert attack that killed at least 137 people and injured 180 more in Moscow Friday. Russian officials are not acknowledging ISIS-K's claims of responsibility for the attack. The Kremlin instead trying to implicate Ukraine. However, Kyiv denied any involvement, and U.S. intelligence officials confirmed ISIS claimed responsibility. Los Angeles Dodgers star Shohei Ohtani plans to speak to the media for the first time since the illegal gambling and theft allegations involving his interpreter emerged. There are at least 2 investigations in progress, one by the IRS, the other by MLB. Dodgers manager Dave Roberts says it was Ohtani's decision to address the matter.
I'm happy he's going to, speak to what he knows and give his thoughts on the whole situation. I think it'll give us all a little bit more clarity.
Global news 24 hours a day, whenever you want it with the Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
Today, I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly. We're Monzo. Give us a go.
See? Well, I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly. We're Monzo. Give us a go. See?
Well, I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Just if you were Congress.
Well, obviously, the most important thing is Ukraine. Ukraine and Israeli aid. And now this is where a part of politics is going to come into play. So Representative Marjorie Taylor Greene issued a motion to vacate right before the vote to keep the government open. Now, this motion wasn't set in stone. She reserves the right to implement this when she sees fit. Now, the question is this going to happen during the time that Speaker Johnson moves forward with Ukraine aid? He said last week, that he plans to offer a Ukraine idea, if you will. Now, what that aid looks like, still to be up for a discussion. But if this motion to vacate comes through, then they're going to have essentially a vote to decide whether or not Speaker Johnson keeps his job. Now, we've seen comments from Democrats over the past week or so, a couple of New York Democrats, for example, that said that they'd be willing to offer the Speaker, but that comes with a price tag. And the question is, what is that price tag? Now, if that motion to vacate succeeds, everything stops. You can't do any work in the House whatsoever, and we go back to the game of watching C-SPAN where they try and elect a new speaker. Now, if the motion to vacate fails, and I'm not saying it's going to come, but if it does come and it fails, then we can move to Ukraine aid. Then we can move to things like Representative Patrick McHenry of the House Financial Services Committee wants to move on crypto legislation. And then we can do other things like FAA reauthorization, keep the planes, going and so forth like that. All things that have to be done before Congress says, I'm good. I'm just going to pay attention to the election now.
Okay, you watch C-SPAN. We're not going to watch C-SPAN. That's why we go to you. That's the whole point. Okay, let's go to greenification because I made up the word and I want to talk about it. So basically, you have companies like Century Aluminum, Cleveland Cliffs, for example, getting sizable loans right now, like $500 million plus worth of loans. Overall, we're looking at $6 billion was doled out today. What is this for? Is this a good use of money? What's the rhetoric down there in D.C.?
Well, so I think there's really 2 trains of thought here. You have the political calculus, and you also have the market calculus. Now, my energy colleagues will say that no matter what happens in Washington, the market calculus says that green energy and solar and wind and so forth right here is a good investment. And so you have a lot of these companies that are going out there and saying, look, we think that we can move forward with this because no matter what Washington does, we think it will be a good return on investment. But from the political calculus, you have the Inflation Reduction Act. Now, this was a whole bunch of carrots and tax incentives, over $500 billion in new spending that is boosting a lot of these EVs and a lot of these green energy companies. The question here is, what happens if President Trump wins in November? Now, I think there's 2 scenarios. One right now, because the Republicans are not in power, you see a lot of statements saying that we're going to repeal the entire thing in its entire, all these tax credits and so forth like that. But if they become the party that's in power, it's a little bit more difficult to do when there's a lot of red states out there that are getting getting the benefit of these, green tax incentives. A lot of new plants are being built and so forth. So I think in terms of the political calculus, if President Trump wins, tweaks may be on store, or certain tax cuts and certain tax incentives may be in trouble. But ultimately, my energy colleagues love to tell me that no matter what happens in Washington, the green energy wave is still coming.
Oh, I hear that all the time, Nathan. You are not alone, my friend. What's interesting is I was in CERAWeek last week, which is the big energy conference, and Secretary of Energy Jennifer Granholm was there. And the message sort of 2 years in a row was, guys, we have money for you. come get it. Which I don't know if that's what you really want to hear if you're worried about fiscal deficits, but that was the idea. They have to put out these loans in a time frame. So like if you want them, you got to get them. And I've been talking to other people as well who say there's not enough projects. Like we're definitely going to spend money in areas where we shouldn't because we're just not. The time frame isn't really working in the same way. It's like cut a check, go for it.
So they're going to build a bridge to nowhere type thing for energy.
They'll build bridges. Some might go somewhere, and some might go to nowhere. But should that be the case, or should you put some of those bridges and like you give it a little bit more time and see if something else can come up? But anyway, I'm into it.
Hey Nathan, just what we're seeing in Congress with Mr. Johnson trying to, in order to get the House in order, the House majority, he's working with the Democrats, and I know Marjorie Taylor Greene has put out a suggestion that maybe it's time for him to be removed from power, but it seems like that's the only way to get anything done these days. Can he survive?
You know, I think it's a big question, but the answer is that he's been doing a lot of what we've seen other Republican speakers do over the last few years. It's one thing to say that you're going to try and stop, legislation from appearing and so forth like that. It's another thing to actually do it when you're in power. And so what we've seen is Speaker Johnson has said, look, I want to try and keep my options open. And remember, things in Washington don't get done until the last exact second before something bad happens. And so it's always keep the options open, keep it flexible, but ultimately Speaker Johnson has kept things in the ball rolling. And so I think what we'll see over the next few weeks is you may see a motion to vacate. You may see Speaker Johnson be vacated, but then the question is, who else do they have on the bench? They've gone through so many different individuals, Representative Tom Emmer, Patrick McHenry, and so like I'm not exactly sure what would happen in terms of another motion to vacate. But if the Democrats, it only needs to be about 4 or 5. If those 4 or 5 Democrats come out and say that we're willing to help you for a price, this could be over and we could just, be back to seeing Congress do legislation.
Man, Nathan, I don't envy your job. I say that every single time that you come on. Nathan Dean, Bloomberg Intelligence.
Likes this stuff, though.
He does, I know. He's a U.S. policy senior analyst, and you know what?
Good.
He digs it.
He digs
But that's what I love about it. It's like he's engaged, he's really into it. That's what a lot of our Bloomberg Intelligence guys bring to the whole situation. And then we have all the Trump drama unfolding in Lower Manhattan also. Yes. Which, like, how does that affect anything? I have no idea. But
I don't know. But we've got the audio, the video feed here from somewhere just kind of showing a bunch of, corrections officers in some courthouse in New York awaiting, the president's arrival. But then he's also got the issue in another New York court about, satisfying that $454 million judgment. And presumably that's going to come to a head today as well. So.
And the bond, and is he going to have to do forced fire sales? Like, how does that all work? I mean, I don't know. I don't know. And then how do you fund a campaign at the same time, right?
I don't know how you compartmentalize, but he does that pretty well. So we'll have to see how that plays out. But I guess there'll be some news on that this afternoon.
We'll keep you updated.
Yeah, very good. Yeah. Good.
All right, you're looking at S&P, pretty much doing nothing. It's a little bit heavy, down 0.2%. This is Bloomberg.
Now, your company news headlines on Bloomberg Radio.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. An executive shakeup at Boeing. Its president and CEO Dave Calhoun will step down at the end of 2024. Bloomberg's Brooke Sutherland was not surprised by the news.
Change does start from the top, and I think that it's just been striking the degree to which Boeing has been reluctant to talk about this as a deep-rooted cultural problem. And I think you need somebody to come in to really look at everything with fresh eyes. Because remember, Dave Calhoun has been on the board since 2009, but now the question is, who do they get to bring in that fresh perspective?
Boeing shares up about 0.5% right now. To United Airlines, which is dealing with safety issues of its own, now it's said to be facing temporary FAA limits on adding routes and flying customers on newly delivered aircraft. United shares, they're down about 5%. Over to tech, European Union regulators, they opened investigations into Apple, Google, Meta, and first cases under a new law designed to stop big tech companies from cornering digital markets. Now, the European Commission said it was investigating the companies for non-compliance with the Digital Markets Act. We get more with Mandeep Singh from Bloomberg Intelligence.
Alphabet and Apple have the operating system. They have the default apps that go on your phone, and they have the option to keep those as defaults. Users aren't even allowed to change those defaults. Now, I think the other aspect of it is the commissions they charge on the App Store. So there are two burning issues here around what the EU is focused on, but clearly these companies have to change behavior to comply with that.
We've got Apple, Alphabet shares down 1%, Meta shares down nearly 1%. And sticking with tech, the Financial Times reporting China looking to limit the use of U.S.-made microprocessors and servers in government computers. So I want to check it with Intel right now. They're down about 2%, and advanced micro devices are higher. That is your company news this hour. I'm Lisa Mateo.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday, everybody. We made it through the weekend, and here it is Monday. Shortened trading week, though. I'm Alex Steele alongside Paul Sweeney. You're listening to Bloomberg Intelligence Radio, where we cover all the top stories and all the headlines for you with our Bloomberg Intelligence analysts that cover 2,000 companies and 130 industries. We also cover world and national news, and for that, we go to Michael Barr. Michael?
Thank you very much, Alex, Paul, Lisa. Donald Trump is in a New York court as a hearing is underway in his hush money case. New evidence in the case has delayed his trial. It has been put off until at least mid-April because of the recent delivery of tens of thousands of pages of records from a previous federal investigation. Meanwhile, Donald Trump faces a looming deadline for his around $460 million bond payment in his civil case. The New York Attorney General, Letitia James, could start seizing his assets today, including his property, if he fails to secure the bond. The former president's lawyers say he doesn't have it. Eric Snyder is the chairman of the bankruptcy department at Wilk Osland.
In my experience, it's not something that can be secured by real estate because the value is too subjective.
Eric Snyder at Wilk Oslander, Trump was charged with falsifying business records. The U.S. Senate cleared a $1.2 trillion government funding bill over the weekend to avert a partial government shutdown after beating back efforts by conservative Republicans to enact steep spending cuts and restrictions on migration. We get details from Bloomberg's Laura Davison.
So this will basically fund the rest of the government. They had passed another spending bill earlier this spring, but this will fund the government through September 30th, which means that Congress won't be facing any government shutdown deadlines for the next 6-7 months or so. So this will help them be able to sort of move forward and ideally come up with all the spending bills for the next fiscal year. That's how Congress is supposed to work, but frequently it leaves these things to the last minute, or even gives themselves extra time on the clock to push forward.
Bloomberg's Laura Davison. Tomorrow, the Supreme Court will consider a new abortion case affecting women across the U.S. Abortion opponents want the High Court to ratify a ruling from a conservative federal appeals court that would limit access to a medication called mifepristone, which was used in nearly 2/3 of abortions last year. The case comes 2 years after the Supreme Court overturned Roe v. Wade. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Alex, Paul, Lisa.
Thank you so much, Michael Barr. So I don't know what you do for Easter, but apparently if you buy chocolate, you're going to be paying up a lot more. So cocoa, obviously the key making ingredient of chocolate, is continuing to rally. And I'm saying, you look at this chart, rally may be an understatement.
Yeah, I mean, it's just, just setting off fresh records here. Oil, just looking at the cocoa, so as the Easter holidays approach, chocolate, eggs, and bunnies are getting more costly. And next year may be even worse. That's due to unrelenting surge in cocoa prices. Futures of the sweet treat have skyrocketed, setting new records day after day to make cocoa the hottest commodity. The main reason for this is the surge in poor harvests in West Africa due to drought and disease, which have been worsened by decades of underinvestment and insufficient support for millions of impoverished cocoa farmers. So, supply-driven issue there.
Yeah, but also if you have insufficient support overall and underinvestment, it's not going to solve itself anytime soon, like once the drought is fixed, for example. But that's, and it's so hard to hedge that too, like if you're a farmer, and as you have more changes to the climate, stuff like this is going to become more important because you're not going to be able to get ahead of that.
No, and it seems like that part of the world, I mean, you can't bet on it getting better, as you suggested, anytime soon. It makes you think, why can't you grow it in other parts of the world? Because I remember for like, for coffee beans, it just needs a certain part around the globe. So it can be in Latin America, it could be in Africa, it could be just as long as it's at that, latitude and longitude, or whatever it is. I wonder if that's the same thing for cocoa.
Here we go. I just Googled this. Requires high rainfall and temperatures to grow, as well as rainforest trees to offer shade and protection from too much light and damage caused by winds. Because cocoa farms are sensitive to this type of climate, they can only flourish in a narrow band of countries between the 20 degrees north and south of the equator. This is what we do for you guys.
Yeah,
on
exactly.
Intelligence. We fill you up with random stuff that you can bring to your Easter table on Sunday. You got it. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Michael Shaw. He's Bloomberg Intelligence Senior Pharma Biotech Analyst. Novo Nordisk, yes, the Wegovy folks, they're agreeing to buy company Cardior for up to 1 billion euros. Hopefully they can make this stuff faster, so we'll check in with that. George Ferguson, Bloomberg Intelligence Senior Aerospace Analyst. We're going to get his thoughts here on this Boeing news. Just big shakeup in the senior management of Boeing as they try to deal with their quality issues, and we'll get the latest from from George. And then we got this guy, Joe DeGrossa, coming on at the end. I don't know how he got past our standards people, but we'll talk to him nonetheless. Chairman and CEO of Axis Capital, former colleague of mine, way back in the day. If you want some stories, Joe's one of the guys who can get them for you. Right now,
we're doing the stories.
Exactly.
It's
Lisa Mateo, she's got a Bloomberg Business Flash. Lisa, what do you have for us?
You got it. Stock taking a little bit of a breather after that rally that drove the market to its best week of 2024. Right now, we have the NASDAQ S&P 500 down about 0.1%. The Dow is down about 0.3%. Now, traders are keeping an eye on a few central bank speakers. We had Fed Bank of Chicago President Austin Goolsbee telling Yahoo Finance that he's expecting 3 rate cuts this year. Then his Atlanta counterpart, Raphael Bostic, saying that he expects at least 1 rate cut this year. Now, the Fed's preferred inflation measure due out on Friday. That's when the markets will be closed, though. It's expected to show still elevated price pressures. Now, on that same day, Fed Chair Jerome Powell also scheduled to speak. The 2-year yield will head over there in that direction at 4.64%. That's up about 5 basis points. The 10-year yield up about 5 basis points as well at 4.25%. And on the commodities front, we have spot gold higher at $2,176 an ounce. And over to oil, NYMEX crude $82 a barrel, Brent crude at $87 a barrel. That is your Bloomberg Business Flash. Paul and Alex.
All right, thank you so much, Lisa Mateo. We appreciate that. All right, let's dig into some of the big movers here. A couple of them I have some questions on here. And Norma Linda is here to help us break it down. Let's go to the big tech guys: Google, Apple, Meta. EU's coming after them, yet again.
yet again. So we're looking at these tech stocks this morning with them being probed by the EU and potentially facing the risk of hefty fines as a full-blown investigation is coming into these firms, specifically with them really cracking down on the power of big tech, which we know that this has kind of been a story that we've been hearing from many different counterparts, but it's really interesting to see this coming here from the EU. They're saying that Apple and Google's App Store rules will be targeted as a result, as well as Meta's Instagram and Facebook platforms. They have these new subscription fees that seem to be an issue here.
I mean, it seems like, I don't know, we've seen this story before, starting with Microsoft way back in the late 80s or early 90s, but what we've learned from these European regulators, they're not going away. They take this stuff very seriously, and they do get, as Mandeep Singh was talking to us earlier, if they want to change behavior, they can get that through the various fines and things like that. But it'll be interesting to see if the shareholders kind of look through these things.
Yeah. Also, I was reading too that you could, if you're Apple, for example, you could just make up the fees in a different way. Like they were saying that Apple added some costs for software makers, like a 3% payment processing charge for apps that use Apple's Apple Wallet, right? So even though you're not getting that 30% from an app, like maybe you're getting it in other ways. I just don't know like what that number winds up being and how do you protect against that. All right, let's go to Supermicro Computer. Okay, what do we got here?
So this stock is up about 242% this year. And it's the biggest gainer in the right? We can just sit there and think about that number. But this is the biggest gainer in the S&P 500 this morning, climbing as much as 9.5%. Now, this comes after JP Morgan initiated the stock with the recommendation of overweight. It says that the compute cycle is at the forefront of AI revolution, and Supermicro disrupting the traditional server market structure and the growing AI server market justifies premium valuation. Now, this stock currently has about 13 buys, 4 holds, and 1 sell rating from Wall Street. So we do see quite a bit of people are behind this.
Boy, stock that's doubled in the past year, then you come in and initiate with a buy rating. That takes some courage, I guess, is a nice way to say it. Because boy,
where you been, buddy?
Right. A, where you been, and two, is there anything left in this thing? But it's interesting to see. But stock up 9%. But this is just before 3 weeks ago, I had never heard of this company.
Well, it also has had like a bazillion different iterations, right? Like, wasn't it like a totally different company 20 years ago? Am I making this up?
I don't know.
I feel like, the funny thing is I haven't heard much about it either until recent weeks, and now I feel like everyone can't stop talking about it. It's in so many different headlines, and so it's really interesting to see what's going on today.
But it's based in San Jose, California, where all these companies, Santa Clara, San Jose, all that kind of stuff, that's still the place. And looking at the market cap, $62 billion, so it's not a small company.
Yeah.
It is not at all. I'm trying to find out, it did something else. Like, it was a whole different kind of company. And it began, like, 93, apparently.
Wow.
So it's been around for quite a long time. They had server technology, maybe? I don't know. Anyway. I agree. Really interesting how that all shifts and changes and how it's like, oh, wait, that's an AI play. Let's do that.
Right.
All right. Take-Two Interactive.
Yes. So
what is happening? Worst performing stock on the S&P?
100%. And so this is on the flip side here. It earlier shed as much as 7%. Now, this is coming after news in late trading Friday said that Grand Theft Auto 6, which we know everyone's really been waiting for, that production could miss its 20... I mean, everyone being the people who are on the games.
Gamers.
Not me. but for those that are gaming, they've been waiting for this, right? And so they could miss the 2025 release window. And it's like people are worried that this could become a delay into 2026. About a month ago, Rockstar, which is Take-Two's division that focuses on GTA 6, asked employees to return to office 5 days a week. But what the issue seems to be here is that people aren't really coming back to the office, which is making people worried that this production will not meet the deadline that we're trying to see in 2025. Right now, Rockstar is still pushing for a spring 2025 release date, but they're still waiting for employees to kind of get back in the office and get things going.
What I noticed here is the trading volume was triple the average for this time of day. So investors are selling, and they're selling in size too. Interesting, kind of confirms the movement.
Grand Theft Auto, I just don't, okay, this is not my game for sure.
Neither.
Or my jam. But how many of them do you need? Like I remember back in the day, I'm going back 15 years or so, I'd be that reporter who'd be out at like midnight with like the line of people who were like super pumped to get the game. Does that still happen? I don't know. You had boys.
It's online gaming now. They're not going to the stores.
That's just different.
Yeah, not going to the stores, but Yeah, I mean, it's what I learned about it early in the day is you treat the gaming business like the movie business. You have to have fresh content. So just like, would you go see a Star Wars 5? Yeah, you go see it because there's a whatever 6.
Oh, fair enough. I see what you're saying.
But it costs as much or more to create these games than it does a movie. And their box office or their sales for these games are like, they dwarf some of the big movies. So it's just huge money out there.
And I think it's
more than a movie to make.
Yeah.
Oh my. Wild. Yeah. I feel like it's also a lot of the celebs. Everyone's looking for all these new celebrities that are gonna be in Grand Theft Auto 6. I actually know quite a few people who are super excited about this. Not my forte, but I mean, apparently people are waiting, and there should be a bunch of new faces coming out in this new rollout.
Wow, scratching my head.
My gaming jam is Pong.
Okay.
Pong?
You can go Google that.
Okay, I'm gonna go Google
This
that.
is not ping pong?
No,
Okay.
this is Pong. Go Google that. That's my
Doing it.
kind of gaming right there, and you need to kind of get the whole visual thing going there. So, all right, Norma, Linda, thanks so much for joining us. We appreciate that. It is a Monday.
Yeah.
So that means there has to be some kind of merger in the healthcare, pharmaceutical kind of space like that. And sure enough, we've got Novo Nordisk agrees to buy Cardior for up to 1 billion euros. So we need to talk to somebody smart on this stuff. So we go to Michael Shaw, otherwise known as Mikey Shaw, amongst his buddies, Bloomberg Intelligence senior pharma biotech analyst. All right, Mikey, what's Novo Nordisk doing here? What is this company Cardior? What do they do?
Yeah, I mean, the deal is very much in line with kind of Novo's strategic aspirations, which is to build, a presence in the cardiovascular disease space. So prior deals that they've done include a deal with KBB for a hypertension asset, a deal with Corvidia for ziltivekimab. So this is very much in line with that sort of play. In terms of, the lead asset, there's a drug called CDR132L.
Sure.
So, in simple terms, it's designed to block a biomarker of heart failure. What we see with current therapies is, current therapies kind of halt disease progression. But they don't necessarily, they slow disease progression, but they don't necessarily, halt it or reverse it. And that's kind of what Novo or Corvidia Cardior, are trying to do with this asset.
So they're trying to stop it all together and reverse it?
Yeah.
Wow, that's amazing. How does this also fit into Novo's weight loss drug? In that, I remember speaking to the Novo Nordisk CEO, and they're like really, really, really invested in like improving people's overall health. Like the weight loss drug isn't about losing weight. It's about relieving the pressure that it puts on the heart. It's about relieving diabetes. It's about the broader stuff. How do these two work together?
So, I mean, absolutely. In terms of, it adds to, or could potentially add to Novo's, cardiovascular portfolio. So, it's still very early stage, but, we're seeing Novo build this presence in the space. So we've seen the outcome status for supplemental approval for Wegovy. That's also, pending a approval in heart failure. We've got these other assets, which I talked about in terms of ziltivekimab, adenurone, the hypertension drug. So it's really just kind of building out that portfolio, in the space. And obviously there's, significant overlap between cardiovascular disease and obesity too. So there's kind of synergies there also, which could be recognized.
All right, so I'm asking for a friend here, Mikey. When is Novo Nordisk going to ramp up its production of this Wegovy and Ozempic and all that kind of stuff to meet demand? Because it's not even close yet.
Yeah, Novo Holdings obviously did the deal recently. Production's going to take time to ramp up. It's 3 to 4 years before these sites come online. And there's also limited capacity in the market as well. I think what's going to help kind of things longer term is the potential approvals of oral GLP-1s. That should hopefully ease some of the tight supply.
And what's the timing? What's the timing on that?
So 27, I would say, that sort of time frame, 27, 28, possibly maybe a year earlier. But yeah, I mean, there's several players that are developing oral GLP-1 drugs. So Lilly being one of them. We could see some data for Viking and Amgen's, albeit early data this year. But yeah, that could really be key to kind of opening up the market.
So are there also M&A opportunities or bolt-ons that Novo Nordisk could make to help expand capacity more quickly?
Well, they've done one deal already, and yeah, I mean, they're looking to invest to basically expand capacity going forward and support their GLP-1 portfolio. So it wouldn't surprise me if there are further deals or further efforts and investment into expanding their supply capacity.
All right, so Mikey, what are some of maybe the one or two big therapeutics or drugs or that you think are a 2024 event here that you guys are waiting on, that if something hits, it's just going to be big, whether it's in the world of cancer or if it's in the world of anywhere else in healthcare? What's kind of the next big blockbuster that you think is reasonable to come out of the pharma industry?
I think 24 is all about weight loss and some of the comorbidities, to be honest. I mean, some of the data points that we're looking out for, it's going to be semaglutide, MASH readout, so that's a liver condition. We're also expecting kind of detailed data from Boehringer and Zealand's survodutide in the same disease area. And then we'll also see details of Lilly's Zepbound in that liver condition too. BC readouts are front and center again. So in terms of upcoming data sets, it's going to be Amgen's readouts for Amgen's assets, and as I said earlier, possibly some oral data for Viking's GLP-1 drug.
What do you make of the valuations for the likes of Novo Nordisk or any that are in the weight loss drug? Like, we have no idea how to value this. It's sort of like the AI phenomenon. How do you think about it?
Yeah, so when we look at Lilly and Novo, in terms of the large pharma peer group, they clearly stand out. Obesity, GLP-1s underpinning their growth prospects. Both have, well, Novo at least has, margin is up there with peers. But if we look at, the obesity space, in general, more than 100 million sufferers, GLP-1 penetration rates, are very low at the moment. We think access is going to improve, as we see more data, as we see more benefits in comorbidities. And, we're looking at we're forecasting an obesity market size of, $80 billion in 2030, which is looking quite conservative. And when we look at kind of penetration rates, the penetration rate that, that's based on, just 12% of US patients being on a GLP-1 therapy. So there's significant runway there, to support the valuations. And then there's also other markets which we, haven't necessarily kind of fully factored in. So China, for example, could be a massive market for these drugs.
All right, Mikey, thanks so much for joining us. As always, Mikey Shaw, Senior Pharma Biotech Analyst for Bloomberg Intelligence, joining us from London via Zoom. Alex, I'm seeing a red headline across the Bloomberg terminal here. Trump bond reduced to $175 million in New York fraud case. So I guess that's a piece of good news for the former president. It's a lot better than the $454 million he was staring at.
And then if it was 120% to post, it was even more than that. He has said last week that President Trump has almost, I'm quoting, $500 million in cash, and that he will use a substantial amount of that to fund his campaign to return to the White House. In a court filing, he did claim that he'd need closer to $1 billion in reserves to cover the bond and still have enough cash on hand to run his sprawling real estate company. So, I mean, anything at that point, $300 million reduction potentially helping him as well. Trump has said that the cash crunch had emerged after 30 insurance companies that arranged such bonds refused to take any of his properties as collateral. So the latest headline is that his bond reduced payment for President Trump now to $175 million in that New York fraud case. Remember, the overall penalty was $454 million, and you usually have to pay more for that bond.
Yeah, so the question is, does he have the cash wherewithal to make that $175 million, satisfy that $7,500 million bond. I guess that's the next question. But that's something that I think that would have to be answered again today, right?
I have no idea.
Yeah.
This is why I'm not a lawyer. And also I should point out, but he's also sitting for one of his criminal cases too.
Yes, I guess I see some video shots of the courthouse in Manhattan. I guess this on the hush money payments. Apparently that is also going on today down there. So again, I guess I think on the margin, a piece of good news for the former president. His bond reduced to $175 million in the New York fraud case. So again, I guess the next steps will be just how does former President Trump and his team, how do they satisfy that bond?
Do they keep fighting it, or I think he has 10 days, right, to deliver that money? So is there anything that needs to be sold?
Well, something was due today. I thought today was on the former bond. Maybe this is a new bond or something.
Well, this is that President Trump must pay that $175 million bond within 10 days. Okay. That's the court. So it gives him some time, I think, to get it together. So I wonder where that comes from and how that winds up coming from there. Joining us now is Eric Larson, Bloomberg legal reporter. I saw him. He literally ran from his desk. So don't mind if he's a little out of breath. Were we expecting a reduced bond here?
I would have thought that if they were going to reduce it, they would have put it at the $100 million request that Trump had made, because he had said that that was the maximum he was able to actually arrange. So it'll be interesting to see if Trump says that he can go ahead and do this larger one.
So, but if nothing else, it buys him another 10 days. Are we reading that correctly? That he would have to satisfy that $454 million bond today, but now with this reduction, it kind of starts the clock again. Is that?
Exactly. So that definitely, for now, the New York Attorney General won't be trying to seize his assets, which was the big fear starting today.
So can you just wrap this in? So what was the argument? Like, how did they arrive at that 175 from the 454? Like, what is the conversation around that? And is that the normal conversation we would hear from anybody who was going and trying to get the fine reduced?
Well, it's a pretty unusual situation to begin with, just because normally with damage awards this big and bonds this big, they involve like really big Fortune 500 companies or things like that. And as Trump's lawyers argued, for a privately held company, the Trump organization is huge, but not as massive as some big corporations, that it was just really difficult for them to arrange a bond of this size. So it's all kind of novel. It's an unusual situation all around. Haven't had a chance to read the whole decision yet, but I think the appeals court just decided to have a little bit of mercy on him while still putting him under some pressure to arrange a bigger bond than he says he was able to.
Okay, so that's that. So we have, I guess, 10 days to get to the next chapter here, but former President Trump is still going to be down in a courtroom in Manhattan today, right?
Right, that's correct. He has a hearing in what is probably going to be his first criminal trial. They haven't scheduled the new date for that yet. It was supposed to start today, but they delayed it because of some new evidence. So he's been in court with his lawyers this morning. His lawyers have been getting grilled a bit by the judge in that case. So it'll be interesting to see what happens with that trial. They could set a new date for that today. It could be as soon as next month.
And what is the argument here? Like, which one's this one?
This is the so-called hush money case. Okay. He's accused of falsifying business records to conceal hush money payments to a porn star before the 2016 election.
And he still had, so we got this one, and there's still some other things going on, right?
Right.
The January 6th case, is that federal in Washington? And do we have any sense of timing on that?
I wish I knew. We still don't have any dates for the other three trials, not yet.
Other three trials. You got to keep on top of it.
Oh my God. I mean, do you have like an Excel spreadsheet there?
Yes.
Okay, you do. Okay, he's literally not kidding. Just one more question on the bond here. What is your question now? Now that we know the actual number and it's in that weird spot, higher than he said he could pay, but much lower than the original, what is your question?
My question now is, are they going to stand by what they said, which was that there was no way in the world they could get a bigger bond than $100 million? Or are they going to say, okay, fine, and circle back and try to see what they can do? Because he said that if it was anything more than $100 million, he'd be forced to sell some assets in order to raise that extra cash, because those companies that arrange bonds won't take his real estate as collateral.
All right. head scratcher. Although I guess 75 million is better than adding on 400 million.
Yeah, right. Yeah. So I mean, it's
that.
probably a good day for the president today, just from how the math works. Eric, thanks so much for literally running down here from your news desk to get us the latest here. Eric covers all the legal stuff for Bloomberg News. All right, let's kind of reset here. We'll check in with Lisa Mateo for Bloomberg Business Flash.
You got it. Stocks right now, they're lower to kick off this new trading week. We have the NASDAQ and the S&P 500. They're down about 0.1%. The Dow down about 0.3%. Now, I want to dig a bit deeper of the 11 major industry groups. We have the biggest drag coming from communication services. Most of that media entertainment, and then if you go a little bit further on the hood, we see interactive media and services with Alphabet and Meta at the top of that list. Has a lot to do with that news today, along with Apple, that they could face some hefty fines. The EU looking into their compliance with some strict new laws. So I want to check it with Apple shares. They're down about 1% right now. Same for Alphabet and Meta, all down 1%. Over to the bond market, the 2-year yield at 4.63%. That's up about 4 basis points. The 10-year yield at 4.25%, and that's up about 4 basis points. And finally, currencies, the dollar weaker, Japanese yen, euro, British pound stronger. Bitcoin is up about 5% at 69,473. That is your Bloomberg Business Flash. Paul and Alex.
All right, thank you so much, Lisa Mateo. Let's go back to that top story of the morning, and that is Boeing. So that stock up, let's see, I think we're just up by about 1% here, as David Calhoun will be stepping down as CEO, but not until the end of the year. Apparently, he's going to be intimately, I made that word up, but he's going to be involved in his replacement, which I also think is quite interesting. So I want to go to George Ferguson. He's the guy. Yep. He's the airline guy that you got to go to. He is Senior Aerospace, Defense, and Airlines Analyst joining us now in Princeton. All right, George, your reaction to the news that we saw earlier, and then we'll walk up to what's next.
Yeah, so my reaction was, I think we thought Dave Calhoun probably would be going. I hate to sort of wish that in anybody, but it seemed that, the problems in the manufacturing business, there were just too many of them over too long a period of time to say that he was as effectual, if that's a right word, as he should have been at bringing everything, back into order. It does seem weird that it's going to take them till the end of 2024 to find his replacement. There's a lot of things that have to happen between now and then that the company just can't wait for. Things like the purchase of Spirit Aerosystems, which should improve reporting lines, should improve the stability of the production process and the quality process. That's super important. They've got to serve to the FAA their view on how they're gonna stabilize their production process. That's coming due here too, and at the same time, right, they've got to start to increase build rates so they can improve profits and cash flow. They can't wait a year on that either. So there's a lot of super important things that are happening this year. To wait till the end of the year to replace a CEO that doesn't seem to have been able to get that job done well seems like a lengthy timeline to me, but it may just be that the board was flat-footed in realizing that the CEO had to go and is nowhere in a search, and so they've got to start from scratch here and figure out who the next person is.
What can you tell us about Stephanie Pope? She's going to be stepping up and taking a bigger role with the aircraft business.
Yeah, so she's been around for a while, and she's been the CFO of the aircraft business. So it seems like a logical inside choice. It may not be the final choice there, although it may well be. But I think when you have a head of that department, Stan Deal, who's leaving after 30+ years at the company, they're hard shoes to fill. And then you look around internally for who could be the next person. The CFO is always in particularly decent shape because they understand at least all the financials about the business. She's also had positions at Boeing Global Services, which is a super successful business inside Boeing, high teens margins. To me, the only thing I don't see in her background is that manufacturing skill set. Mm-hmm. I think the next CEO and the next head of Boeing Commercial Airplanes has to really have a manufacturing, engineering mindset background, and I think that's what I don't quite see there.
Sort of like a Larry Culp?
I mean, Larry obviously is pretty busy, and honestly, the job he has now at GE could be better profits, more fun than Boeing, because there's a lot of great technology inside GE, and there's a huge bow wave of a lot of maintenance coming that's really high margin. I think you'd really have to work hard to get Larry
But
Culp
George,
out of there.
I mean, does he like fun or does he like a challenge? I mean, he was the one that went to GE to begin with.
Sorry, you broke up a little bit there. Say again.
Oh, I was saying that does he like fun or does he like a challenge? Because he was the one that went to GE in the first place when it was a hot mess.
Oh, I do think he likes a challenge, and I think he showed his ability to navigate it really well at GE. But again, they're just kind of getting to the super fun part. I think there's still challenge inside GE, but he's just getting to the point where he's got aerospace broken out, and he can really make a lot of hay here. So, someone like him is absolutely what I think Boeing needs. I don't know. Maybe he's got maybe there's a protege somewhere inside there that they could tap or something.
So, thinking about who could be the next CEO here, is the expectation, George, that it'll come from an external candidate or internally, and are there any early front runners, do you think?
Yeah, so I definitely think it's going to come external, right? I just think the fact that you've seen this purge of the CEO, you've seen the purge of commercial airplane president, means that we've depleted some talent there. You look, there was, former heads of Boeing's commercial airplanes that had left, when Muhlenberg came on. They could potentially be, in the running for something like this. I know that a couple of them wanted the CEO job and didn't get it, but I'm almost positive you're talking about something that's going to be outside. It's Ray Connor's the name that comes to mind. Used to be the head of Boeing commercial. I'm not sure what he's doing now, but he might be on the list somewhere.
What's the culture like at a Boeing in terms of getting an outsider?
I think Boeing is one of those companies, I think you get a job and you stick around for lots and lots of years. And so, I think that bringing people in from outside is something you do only when you have a breakdown like you've had now, right? Under normal circumstances, there would be very clean lines of succession inside Boeing. You would move up through the ranks and expect opportunities as you rose. But there's been so much tumult in this business over the last, 4 years or so, that I think that it's a time in their history where they're going to be going outside a lot more to replenish some of these senior management ranks. So they've turned over a bunch of it.
And George, it seems like this is no quick fix here. It seems like it was years, maybe even decades in the making in terms of maybe the deterioration of some of their quality controls here. When you talk to industry